Hello and welcome to the show. If you're anything like me, congratulations. We're going to look at GameStop and AMC today. Today on this wonderful, beautiful Thursday, the 16th of June, 2024. So we're going to talk about GME, that's GameStop, and we're going to do a stock update on the charts with some technical analysis, talk about targets, entries and exits for GameStop, that's GME. We're going to also look at entries and exit and a stock update for AMC, that's AMC. The CEO of AMC is Adam Aron. He's got a tweet out today on the old Twitter, so it is, and he's typed in a number of characters together that forms a sentence, and he's published it out there. And oh, what a stir it's made! And we'll have a look at that. Well, like I say, that's AMC. So we're going to look at GameStop and AMC. And I'm Tradespotting. And we're going to look at those things on the charts, okay? On the charts. So that's great you've made it here live. If you've not made it live, you still have to hit that like button. And we're going to dive into the charts, okay? Tell me how you're doing today. You know, are you good? Are you happy? GME, right? 125 pre-market. That's $4 down. Not very good. Not great at all. In fact, it's bad. It's bad. And then AMC pre-market 1226. That's down 4.23% pre-market. Shocking, right? Shocking. How are we going to handle this crazy price action? Well, we started on GME. As you can see, we've speculated on what might happen with regards to price action there. Left-hand side of this potential head and shoulders is a harmonic. Let's see what happens on the right-hand side. Turn off the drawings for a second. You've filled that gap. You've met the 200 period moving average, and we're a bit of an inflection point on these tiny turnip farms. We did speculate that price would go up as it had done so far and come down as it has done so far. And we anticipated that it would come to this 50 simple at 126. It's beyond there. And this line says it's going to come all the way down here to 122.02. That would be the 236 retracement. We speculated it would make it there. Afterwards, we're not sure. It could break down. This is the breakdown of this head and shoulders, and the measured move from that takes you all the way down to $87, right? In around those levels. Crazy, eh? That's what this could be. A huge trap, right? And price action could collapse, come back down to the bottom level of support and even break that. And that could be all initiated with a big trap, which would be this thing breaking above the golden pocket here, maybe even making it back above this golden pocket, which is over here on the left, this big breakdown, and testing up at this 886. And should it get there, you'd be putting in a complex head and shoulders. They've got a much higher degree of probability of coming true, of predicting price action than a typical head and shoulders, this complex head and shoulders. Also, quite violent moves come off the back of them because so many tests have failed in advance of it. So you'd be looking at this and you'd be looking at these as the breakdown area. If price action is bullish in advance of that potential breakdown, which we're focusing on quite highly here because that's what side of price action we expect there to be a trap on. You know, at this stage in an uptrend, it's very unlikely you'd be catching people in a bear trap. If it was to be a bear trap, it would be on a retest of this downward sloping diagonal in a 15-minute time frame. Otherwise, you know, it would just be going so far, it would be good news for bears, right? And at that stage, it would have to bounce back, and we're anticipating that not being the case. So this is a 50 simple down here in a 15, that's a 200, there's a 236 in this Fibonacci, and if it does bounce around those levels or now and follow this potential line that we've got on the chart here. I mean, well, it's not potential, it's a real line, but it outlines potential price action. If we do conform to that prediction, then I'd be a little bit hesitant to you know, jump in on a trade at 138 to 150. Those sort of levels, you'd have to be very cautious. Totally different risk profile from, say, for example, 122. And like I say, the potential neckline or armpits, whichever way you want to look at it, on this thing suggests that it could break down at various different levels, either of which are very likely to lead to quite violent ranging price action with incredible volatility. And let's go now on to AMC. You've got 30 minutes or so there, 20 odd minutes before price action opens. AMC 50 minutes, you can see 1225 down 4% pre-market. There's this wow signal. There's a potential that it breaks through this 236 here, and the previous 236 has formed resistance a number of times. So, see what happens if it drops back below $12 and then subsequently drops back below 11.85. You'd be a little bit worried for this thing. That also comes in around the 886 of the previous Fibonacci, right? So another 10% down there. These sort of moves don't look dramatic on the charts, but they very much are with regards to percentage moves. So you'd be looking at that sort of thing. 1085 be the lower side of the range here. Beyond there, you'd be talking about it breaking previous pivot points, or at least testing them down at like 1019 and so on. And if it did break them, you'd be going to the extension on the previous fib, perhaps at around 974. That'd be short-term moves, talking about whether or not you could define this previous structure to be broken. Beyond those levels, you would say it would be. It's gone beyond the pivot point. And then you'd be looking for the next level of support and the next target on price action, which unfortunately is all the way down here at 777, where this thing meets a long-term trend line that is on a significantly high enough turnip farm you could put emphasis on it. It also meets this horizontal level, does that in and around price action at the minute. So this could happen quite quickly. Now, one of the things that we talked about with regards to AMC, and then we do like compare and contrast these charts as we go along and look at them, not necessarily individually. Today we might go through the 15-minute on Gme and then the 15-minute on AMC like we did, and then we might move up to the hourly and look at them both differently there. And we'll discuss like support and resistance on each of those turnip farms. But in advance of that, there's some information that we'd perhaps want to look to on AMC. So you can see over here, just TradingView says that the share float currently, that's the outstanding shares, 515.578 million shares available in AMC. So this is the news according to TradingView. The details, obviously, that's what the TradingView say. Here's Adam Aaron, Twitter. AMC has done share count 6 times. 6 times in the past year. That's once every 2 months. We know that 516.8 million AMC shares exist, right? So 1.3 million more or whatever, and there's 500 plus million. So that's, what is that? That's like less than 0.02% or whatever, right? This is well within the margin of error. So I don't feel that's too suspicious, and absolutely no problem with the difference between those numbers there. He says they've done a share count, blah, 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 and then he goes on to say, some of you believe the count is much higher, right? And then this is not, it's not stupid, right? You don't need to like parse some mystery from what he's saying. You just have to read the obvious that's in front of your face, right? Simple grammar, right? He starts off by setting up this proposition. Some of you, okay? There's some of you, right? So some of you believe. He says, as I've said before, okay? So he's maintaining that he's consistent. And he's setting that consistency up as an opposition to some of you and your beliefs, right? And your beliefs that the share count is much higher than 500, right? Okay, dead easy. Nothing like nothing that you'll perhaps go on to read down here, right? Yo Jackson, how's it going? Standing up for the right people as usual, right? There'll be nothing that you'll read down in these levels or like in this stuff here. None of that stuff's going to help you make money. In fact, I would strongly say that there's so many examples of popular YouTube channels out there who conflate narratives, who take advantage of their viewers, and who are not in it for the right reasons, right? I say there's a lot of them, and they try to tell you that the reason Adam Aaron is saying this is for your good of your health and your bank balance. They try to tell you that, they would. But that's not what this is. And there is one true point in what Marcel says here about is fulfilling his legal obligations. Yes, he is. He's fulfilling his legal obligations so that nobody can turn around and sue him later when they say, but you led us to believe that there was outstanding shorts, there was naked shorts, or there was synthetic shares, of which, people will split hairs trying to communicate the difference between naked shorts and synthetic shares. The same people will focus on short interest, right? So they do believe that the actual literal share is short, and they do understand like some aspects of the mechanics, but they seem to let themselves down when they start talking about how, The reason that there are synthetic shorts and naked shorts is because of short exemptions, and then they don't necessarily understand the circumstances for short exemptions or why they exist in the first place. They just read lots of rules and find it to be annoying. So what you really want to focus on here is the facts, right? The literal facts, right? They've done a share count. They've done it 6 times. That means they've done it once every 2 months because it was in the last year. So perhaps it's even more than that. We know of a 516. That's a fact, right? It's facts, hard, cold facts that he's putting out publicly to fulfill his legal obligations so that he doesn't get sued. Oh, I know how to tweet, thanks. So that he doesn't get sued later, right? And he says, I've said before, right? Which is like something you can imagine if he is get sued. This is going to be the important part of this tweet, right? Because he has said all of this before. We've seen no reliable info on so-called, right? Which is then at this point, right? No reliable info on so-called synthetic or fake shares, right? Now, I mean, I could show him, right? You can drop the so-called. I could show him over today, if he was sat next to me, I could show him multiple instances of the creation of synthetic shares. I could show him watching the market and say, look, these are highly likely, these ones. And these are these now being closed out, right? Those have now disappeared. And I could show him how that they show up multiple times and disappear multiple times all the time, right? So this is ambiguous here, the way he says that, right? Again, it's ambiguous because, you work that out for yourself, right? It seems obvious to me. And then, or fake shares, right? These are very different, synthetic and fake. This means like naked shorts. People obviously go on and say, but you didn't mention naked shorts. Well, that's what he's talking about there, fake shares, right? That's naked shorts. Especially when he's already gone on to say synthetics. So he's making a distinction. So this is his way of saying naked shorts, right? That's what that means. Read naked shorts. He says, we've seen no reliable info. And reliable info means he's seen some information and he dismisses it. That's what that means, right? The information he has seen. He's not saying we've seen no info at all to suggest that there is these things. He says we've seen no reliable info. So, I imagine when he says inbound tweets, it's because many of them are pointing to information. So there's the tweet, right? He says that there's only 516.8 million shares in AMC. 516.8 million. Now, I'm not shitting on things. I'm saying this is what he's saying. This is what Adam Aaron's saying. And then we've looked over here at the details on AMC and shares outstanding. Available float is different, right? But the float outstanding, where is it? Down here. Share float, 500. Well, it's not on screen anymore, right? But it's 515.5. So there's 1.3 give or take difference, right? Within a margin for error, that's not a problem. So, no conspiracies in that. But there is the idea that people that hold these assets short are convinced, whether they're one person or a billion, they're convinced that they're right at this point in time. And these two stocks in particular have a history of those people who are short refusing to close their position the way a sensible and responsible trader might do so. And it leads to sharp increases in price. And this is why people trade this thing, for the huge volatility on offer. The narrative behind it, right? Whether it's naked shorts, whether it's the short interest at any one particular time, whether it's some news-based event that's also like coincides with these dynamics. These things are always best explained afterwards. The way to make money and change your life, which is what you're trying to do here, and if ultimately it's to change the world, then the next step onwards from this will be changing like your communities and the literal world around you. The way to do that isn't to rely on Adam Aaron. It never has been. Nor is it to think that those changes in the world will come about as a result of some changes in the operations of the stock market. No, that will come about because of your literal work and efforts that will come from the sweat off your back and the money in your pocket. Whether that money comes from your trading will not depend on Adam Aaron, and you have no control over the markets in any asset at any time. It will come down to your ability to trade. This is the fact, okay? This is a fact. And especially and particularly when you're looking at AMC, there are high volumes being traded. Now, the CEO is saying in a tweet to you, not to me, he's saying, we have no evidence of synthetic or fake, aka naked shares in AMC. So if your objective is to change the stock market via AMC, I suggest you're better off aiming to change your own life. And then as a result of that, put effort into changing the world around you and get the same benefits that you're hoping to get, right? That's what I think. And I think then that's testament to you, right? And what you can do, well, things you can control. So that's what I'm talking about. And those things aren't price action. They're how you interact with price action. So that's worth bearing in mind. And so there'll be lots of people now talking about AMC and having the conversation about whether or not, right, which is in some sense, there's no such thing as bad publicity. When you've just come out with like the highest grossing movie in donkeys, it's maybe not advisable, right? You could have got milked that PR a little bit more, especially how it plays with AMC compared to competitors and so on. But hey, everybody makes decisions. Sometimes we find them surprising. Other times they make perfect sense. And maybe this one's a bit of both, like when you think about it. So AMC, how does it react to this news from Adam Aaron? Well, it's going to be disheartening to a lot of the people who trade it for those reasons that I was saying, change the stock market, when they see that it seems as though their own CEO is taking the solidity of that idea is being challenged by somebody who I've seen commonly referred to as an ape, right? So there's this concept. So bear in mind, how does people react to the news then? So pre-market still not opened here. We've got 7 minutes until that happens, and you're down at 100. You're down at 12.25. Gme 125 still hasn't moved there much. And then we're looking at the charts again, right? We've already looked at the 15 minutes. We spoke about what would happen if this was to fail. If it does get to the top side, what you'll be looking at here is flick the drawings off. You've held the 200 period moving average at this stage. Yeah, sure, you've met this downward sloping supply line on this most recent trend. And if you're to turn on these draw Fibonacci retracements down, you probably have, let's just do it. How far back up was this retracement? It was to the golden pocket. And then subsequently, we've gone all the way down here and we've come back up, as you can see, to the golden pocket, right? And so you could be said that we've made the oscillations that are in line with those we've done previously, and perhaps this leads to a continuation of the trend. If it's already exceeded the downward slope and diagonal, you're still, rationale for the reason why you might be going down still there. And so 50 simple approaching the 200, price action would normally test those things. You can see it's being close recently, and that could constitute a test if we were then to go up and follow the 50 simple to the top side. Doesn't look like that's happening right now, though, with the pre-market activity. And we'll see what the opening range says. There's only so much you can take when markets are closed. There's only so much you can do with regards to analysing a pre-market price. So 50 simple approaching the 200 period moving average. And this is interesting because it's an upward sloping trend that is looks like it started to gain an angular momentum that would be very difficult to persist with. 50 simple approaching the 200 period moving average, you're on the 15-minute time frame. So on the 30-minute, where you'd normally expect to see some picture of momentum, you can see you're above the center line in RSI. That's good to see. Your equal highs with your previous high on the oscillator here. You're in the bullish control zone or touched it. So it's hard to argue with being in the bullish control zone. You're also above 200 period moving average. Very difficult to argue with that. And it does give us a positive inflection on our signals. But the 50 symbols below it and below the price, we can see that we've not convincingly broke that 200 period despite having violated it. You've got a sell signal perhaps coming through in the stochastics. You've got volatility starting to pick up quite a lot right at this moment. And your MACD says that most of that signal has played out, right? It's the positives idea you had from a trade down here is now completely different, as represented by the momentum on the MACD, the potential rejection, which would come in with Class B bearish divergence, and perhaps continuation to the trends being signaled by this. You've got volatility picking up on the candle by candle basis, which is what you would expect to find ahead of a trend change. And you've got volatility as represented by its own relation to itself over a percentage, showing a percentile as this thing really starting to build up and the move's getting, a lot bigger. So this could be representative of a huge big move straight down like to 1085 or like even less, right? Those are targets we were talking about earlier. This is the horizontal support around 1033, and to be honest, it's in this formation that the level's 973. So we talked about those levels. I was supposed to be talking about the top side, but then I got caught up in what's actually happening on the charts, right? So there's the 30-minute time frame. I wasn't supposed to be talking about the top side. I was talking about momentum. And this is what the story of the momentum is right now across the indicators. You can also see that, generally speaking, you're coming to inflection point and early mirror. You're not getting enough information about this other than to say that the vast majority of price action within this trend has been accompanied by money leaving the market. So that's interesting. And now we're going to look at GME in the 30-minute and see what's it saying about momentum. You've held above the center line here. You've managed to get rejected so far from the bullish control zone. You've filled this gap. Okay, we spoke about that. We're looking at momentum really here. Filled the gap. The reason you came up partly to fill this gap, test this breakdown area, and price action here could conceivably be in a channel or a flag, which are still potentially a diamond, but we'll see. Obviously, it looks like an awful lot like a head and shoulders there on 30-minute time frame. Right, so 30 minutes, you've got this upward sloping trend line, keeping the drawings off for the minute, and you had your lower lows on the RSI while you had these higher lows, and that in the context of an uptrend might represent bullish divergence. You had a flash that took you back down, 119 and change. Subsequently, you had that bullish divergence on the... No, you didn't. That was afterwards. Well, you touched the bottom of the bearish control zone. Likely you get a bounce there. That took you through the center line. Good to see. You recovered to 50 simple period moving average. Positive splay on the 50 and 200. Now a negative cross with the 50 simple going below the 200 in the shorter term time frames, representing a more recent picture of the current trend on the tightening. Now you see when you compare the two of them together, and the 200 period being above the 50 simple suggests that the longer term trend is now being depressed by this current price action, which you can see literally in front of you. So that's happening as you've managed to get what is through the center line positive rejection from the bullish control zone. Okay, in an uptrend you'd expect that on the first pass, especially if you look left here, and you could say, you really don't want price action dropping back down here, because you've managed to come in equal highs with this previous high here, which was much lower on RSI. You've pushed beyond those areas. You might be, the way price action's evolving here is you've broken down into the bearish control zone. You've since, on RSI, you've since recovered back above the center line. But this recovery above the center line on the RSI didn't mean that, you also don't see price action pushing back up above its previous corresponding high. And so there's ways of looking at that, like you talk about divergence and so on. But, another addition to that, it might be the fact that, bearish and bullish control zones themselves are dynamic, as added to the body of technical analysis by Constance Brown and further by Rich and Rocky when he talks about where he would move them and why. And there goes markets open, price action dropping straight back down. We'll see how it evolves. So you can see here that it may well be that this was, what would you be considered the bullish control zone at this point, to actually be getting back in here to be further up. And maybe even that happened earlier as price action started breaking down and the trend started changing. And where is the bullish and bearish control zones? And that depends slightly on the trend and how far that trend has progressed and what tests have been within it, especially speaking to the momentum. And it may well be that, this constitutes, as we were talking about, as markets are open, already a rejection, more so than just simply unable to give it a qualification as a positive signal, which you maybe would have done if, considering it went through the center line, and not making it in isn't itself inherently negative. It might just be not positive yet, if you see what I'm saying, right? Red, orange, green, or whatever, orange. So MACD crossing through the center line in 30-minute time frame in order to be close enough to give you a sell signal. If price action at the same time falls below the 200 period moving average, that'd be a valid sell. You'd then say this probably is a rejection signal. And then you'd look at this stochastics and see if they started pushing further. At the minute they're starting to cross back up. I don't think that's actually valid robust trading strategies, but it does speak to the fact that there's a little bit of volume perhaps coming in before you see that move. We'll see anyway, not volume necessarily, but there'll be some disagreement, volatility ahead of any sort of a break. You can see here that while price action has been up in these highs on the low term time frames, slightly differently from AMC, the majority of money that has either entered or exited has been entering. Perhaps you'd look then across the open interest and see that over a period of time it's been building up, and that mostly represents long positions, which is the history of GME. Really, that is the history of GME. And then when you go into the so I've tried to communicate tacitly, implicitly, and sometimes quite explicitly with examples that I don't particularly want to sell you an ideology, right? I want to obviously provide like an authentic example of how I want to be myself, and I want you to feel that you can be, but I want everybody who's trading these things to be doing it for the right reasons, right? Not because of a story that somebody else at some point will likely successfully hijack, right? Whether it is like a personality, as people have used it for their career, like there are celebrities who were perhaps previously more successful who will then talk about GME to add credibility to their overall image or to reach a new type of audience or whatever. And these things happen consistently throughout, you'll see it keeps happening. And people come and go. And at times they're trying to hijack the narrative, and it's easier to do when there's one like ideological purpose. The truth is, like, there is an opportunity, I suspect, with GME that goes over and above that which we see with AMC. That's all. Like, I'm not saying that as a negative, but I'm just saying there is this opportunity, and it might well be that there are naked shorts and synthetic shorts in GME, right? It might well be that there are, because certainly not like, Ryan Cohen bought into this whole narrative perhaps after the story has started. And as such, it's not his responsibility or his fiduciary duty to go out and point out, hey, look, there aren't any naked shorts. And maybe that explains why he's not on Twitter saying these tweets, right? But it's also true to say that SEC did an investigation into this. And I would say that investigation itself was entirely compromised, and the report by staff was very contradictory. I say that at the very beginning, they say that shorts didn't cover, or else did. I can't remember what order it came in. And then towards the end, they say that they did cover. A lot of the price action was driven by shorts covering. That's what they say. And at other points, they say the shorts didn't cover. So I think that report itself was put out in the intention of perhaps being part of a number of reports and a longer running investigation. But because it met such, it was accepted, that SEC report, right? It's accepted quite hard to understand looking back, right? But it's accepted by people as saying that proves the argument to the fact that there is no shorts, right? There's people who've had this, and they've made quite a logical and rational argument with me, against me, about why that SEC report is in fact stating that the shorts have covered. And there's other people I've seen have the conversation, myself included, that states like, well, actually the document explicitly says that they didn't cover. So that's the truth there. And there's loads of these things, right? There's DD you can do on it from here until kingdom come, right? Bing bong. And some of it's enjoyable, some of it's educational with regards to the operations and dynamics of the stock market, and not a single piece of it will ever make you money. Not a single piece of it. Never. And every single attempt by these people to put this information out there has cost people money. It's cost people money, right? Lots of money, lots and lots of money. And these people are my people, right? Who it's costing money. And these people who are saying these things or leading these are often allies of mine. So it puts me in a difficult position. But I can say to everyone who watches me, especially those who are consistent, you know me, I'm only trying to help, and I'm always honest, and I won't put out ambiguous tweets or ambiguous reports like the SEC, or send you up some fucking flagpole, right? Or go and actually tell you to take your trading account and piss it up a rope over some stupid idea, right? I'd never do that. I care about you. And at the same time, I care about what we're trying to do, you know, and I know we're trying to do something here because of an injustice that we experienced, okay? And that injustice, I experienced it personally, right? And it was with regards to GME, right? I know that they turned off the buy button on AMC and they did all the things, right? And I know that there's the narratives with regards to why it is that price increased as it did and the things we touched on earlier. I know that, but I know for, like, I've lived through the GME thing, as many of you did. And I've looked at the trades since that all happened, and there hasn't been the volume, right? And that volume would at some stage have to meet, right? They'll have to square that sum somewhere. And if it's in failure to delivers, fine, you'd see it there. It would take slightly longer, but it'd be there by now, and it isn't, right? And if it wasn't, you'd have, if it had been dispersed in advance of that, you'd have seen it in the volume since, right? And it hasn't been, right? It hasn't been. And that's not accounting for all the people who are buying it, right? Now, it's very different from AMC, which has a really high volume, and had they even had naked shorts, it is possible in the subsequent volume we've seen, if you look at the profile since the squeeze until now, that with all of the numbers of outstanding suggested shorts, that a large degree of that could potentially have fit into the volume profile, right? I'm not saying it happened. I'm saying the math says it's possible. And I'm doing that to draw the distinction over to the GME chart, where the math says that's impossible, okay? It says it's impossible. Right, so that's what matters. That's the information that matters, not the tweet that comes out from the CEO one way or the other with regards to various types of ways of shorting the stock that may or may not be legit at any given period of time, depending on how you're managing the system, right? Like, i.e. synthetic shares, right, which are a perfectly legitimate way to create liquidity in the stock market that could be beneficial for all market participants. It's when these things are abused. Now, you'll never see them talk about the specifics because, of course, then A, they probably don't know them. No offense, you know, you don't have to know the market dynamics in order to be CEO of a company, right? You're expected to learn these things as you go along. Some people refuse to. And then, you know, anyway, 124.63, right? We were supposed to be comparing the chart side by side, and it does sound like a lot to a lot of people. What I'm saying is either pro one stock or negative to another, right? It sounds like that because they hear the emotional side of this communication. But what I'm talking about is just hard facts, and that those can be interpreted positively if you want them to be. And I'm certainly positive about potential to make money trading both of these stocks. Each of them can be traded in various different ways, right? Now, that's what I'm saying. That's just straight up all the way it is right now. This is a free video. I've put this video out for free on YouTube, not like the normally, the streams most recently have been Patreon and channel members, and we've been discussing about how to do it going forward. And thanks for everybody for your support. And but obviously, it's much lower numbers than you'd normally get. And I need now, by a long distance, the lowest viewed GME streamer by a big distance, right? I'm not saying that as a negative thing. It's because of the niche that we have here, right? It's not to everybody's cup of tea, right? It isn't. So you'll see people like that loser. What's his name? The guy that's named after a mini disc player, that defunct thing. What's his name? The guy, he calls himself Rants, but it's not a rant. It's just like a slobbering, nonsensical, ignorant, unpunctuated sentence. What's his name? Anyway, that guy, right? He looks like Anyway, he's such a spineless individual, right? You're a spineless individual, Marantz Rants. You're spineless. And people like that who are not like actually going to help you, right? They're not going to help you. They might be constantly saying, "Oh, it's amazing, right?" Like, but Jimmy doesn't need a cheerleader, right? Especially not that kind, right? Don't need it. He's such a spineless loser. People like that, right? They've got way bigger. They got bigger, more views than that. So I've put this public because I want to help people other than just the people who are watching me, and talk about how, you know, whether or not you, and I get criticized this myself as well, like most recently yesterday, right, on a forum that's set up like specifically to help people get believe in themselves, and that I get attacked because people think like, oh, but Tradespotting, you know, you're often talking about MOAS in this sort of terms that's like it's a fantasy that you know, that it just, wouldn't it be nice, and in fact actually, you know, you don't actually believe in this concept of MOAS, and it's and it was put that I only wanted to help people to trade it, and that, and I was trying to explain that these two things aren't mutually exclusive, right? If you want people to change the world, you're going to have to present to them that this idealistic version of what it'll be like afterwards, right? And that might sound like fantasy, right? But don't let that mistake you for thinking the way I talk about AMC and GME, right? There's a distinction in there, right? In that, the AMC idea, you change the world via AMC. I like the narrative, right? And I would talk about it like that way, as wouldn't it be nice? But I'll also be very clear about what I think is possible. And with regards to GME, I think you can change the world, right? I don't think it's fair to talk about the way I describe it as fantasy. And but I do think that you have to be cognizant of how you're going to manage this thing, right? Like, you don't want to be buying the wrong type of contracts at the wrong type of times and then be losing money that you could have put into shares that would have been buying it at critical periods in time and actually bolstered the share price, as opposed to give somebody else on the other side of the trade an incentive to short the stock, right, at a critical period in time and push it below support, right? If you're doing that and it's the wrong time to be doing that, and you're doing it with capital that you could have otherwise put into the stock, you know, there's so many YouTubers out there at the minute costing you money, right? And the way they're doing that is because they're selling the excitement of option contracts to you. And now I understand how it works as good as any of them, but the reason they're doing that is because they want the views, because they need the views, right? They need the views, because without that narrative, they've got nothing, right? They've got nothing. And in total, have they cost or made people more money? Let's face it, because at the end of the day, that's the buying pressure we're talking about, Gme. And really, you're looking at like not trading the wrong instrument at the wrong time just because you're greedy. And nor do you want to trade the wrong instrument at the wrong time because you want to change the stock market, but you could have made a better decision that might have generated you more money and ultimately could have added to more buying pressure, right? So there is a case to be made for trading different things at different times, and I'll try and make it at the best time with a sensible case. So I'm not even sure why I'm talking about these such a wide-ranging aspect of things here, but I really want people to understand that if you want to change the world and you want to change your life, there are two things that can be done at the same time, together, complementary, and or you can do the first, like you change your own life. You can still do that, right? And I'm not going to stand back and say, you should never have done that. That's awful. I can't believe you took profit selling your shares. You can. People do it, right? People fucking do it. There's huge institutions that have got much bigger shares portfolios than you who are doing it, right? And so if you're in a situation in life where you're not able to handle the position you've got at the minute because of the pressures in the rest of your life, and or it's got to a place that's made you happy and can change your life in a certain way, then you're free to do whatever you want, right? And I'll try and help you make the most of the decisions that you're going to make anyway, right? And it is the reason I've got a smaller audience than most of these other people is because I do things like that, right? And say things like that, despite the fact that everything else I do. So, so the spineless losers, like they get, and anyway, right? Half the people out here, you know, you look at them and you can run their profiles through different tools and that, see the amount of bots and that they've got that follow them and stuff. And it's a joke, It's such a joke, right? So people are getting tricked by all sorts of different things, and it's absurd. So what were we talking about? Well, we got to the 30-minute, we made it up to the 30-minute time frame on Gme, and we'd compared that to AMC. Yeah, so the direction of the stock price at any one moment is important. It's important if you're buying it, if you're depending on the contracts, it's important at any given time depending on the expiry on your option contract, should you be holding them. And if you're ever looking to buy this thing, you're going to generally want to have a picture of the TA overall, right? And it changes based on like how price action reacts at certain support and resistance levels. So, I can outline the support and resistance that you're likely to face either side of price action for the next 4 months. And I could tell you the cascading consequences and where you'll bounce between one or the other, generally speaking. But if one gets there and there's a stronger bounce, and that's different from the momentum and the strength and the magnitude of the move we've seen at other areas that can be used to compare against it, and it means that now the picture has changed. That's helpful information, right? And stuff like that happens on different time frames every single day. So just because it's like I can draw a W or whatever on Gme Amc at the bottom here, and like can do a lot of that W, that doesn't mean like that, and when I talk about what's going to happen or could happen in around these levels, that doesn't mean that like you don't need to watch Tradespotting because things are going to go way up to here. That's what people like, spineless twat face and all the rest of them would say, right? Anyway, you have to pay attention to price action overall. You have to pay attention to it, generally speaking. And that's how you make money, right? Because these things happen all the time. And you might take a trade with the idea of, right, it perhaps take me an awful long time in order for this thing to work out. Or you might take it thinking it's only going to take 2.5 seconds. But you don't have any control over the markets and how long things take. So, it may well be that if you are... Anyway, right, long story short... you need to pay attention to price action on the regular, and 30-minute time frames are a great place to start with regards to momentum. Also a good place to measure the strength and of moves and bounces between support and resistance across those levels and on these time frames to work out what might happen on the higher time frames. So we'll go back up now. Gme's just done a big bounce up to 128, so we'll actually not go back up. We'll go down to lower term time frames and zoom in on it. What you do, mate? Where did you find support in here? 200 period moving average, not really. Previous low within the formation, maybe. I'm not getting enough because the drawings are on, so I'm not seeing it. Yeah, it's 200 period moving average. 50 simple lost it, bounced off the 200. You went straight back to resistance. So, this is important. If it breaks above here now and holds it, that'd be good to see. You'd expect it to put a continuation of the uptrend. You potentially got bullish divergence looking back throughout the trend here at this point in the low, but you couldn't. You've gone back beyond a 236 and 88, so you've gone so far back on these lows to measure them as this trend continuing, and it looks kind of like it's rolling over. Stochastics have turned to the top side as you've bounced off to 205 minutes. So, I wouldn't rule out this thing moving higher, but that reaction in and of itself isn't yet the move you're looking for. AMC 1229, it's not really moved all that much, though did drop down to 1212. Okay, so there's a flash, as you see, in 5 minutes back up at 1289 here. That's not overridden in a short time. Was that a gap as well? Yeah, of course, they both opened with a gap. Right, so anyway, got distracted there. So the hourly time frame, I get that guy, is he? It's at the stage now where if you think like you can watch people like him who like go out of their way to try and attack me and spread lies about my family, right? Lies like him. He's a liar. If you watch him, people and me at the same time, don't think that I'm fond of that at all, right? Don't think it. I don't need that. I don't need those sort of people. So, I don't actually want you going out of your way to tell the guy what, but I don't need you around. I don't at all. So anyway, here's the golden pocket. There's the 886. This has managed to make a retracement back to that sort of area. On the hourly time frame, you would say this is a normal oscillation. Having put in a more recent, high within the top side of this downward sloping formation that we've been in for a year, you'd expect then that, there would be some sort of test back up again, right? You've tested the most recent high, you come down to the center line. Is that where you start seeing moves to the top side? We've pushed below the center line, managed to come back to previous lows, and then at this stage you'd expect a bounce. And if that made it through a 236, you'd perhaps be looking to the golden pocket, and that's what it's done. It's done it over such a time period that this next retracement also makes the top side of this downward sloping formation. And so that's like what you would perhaps have anticipated happening back from this low here. Anything that you'd see beyond that then perhaps would be new and would maybe mean, you'd have to put it in a new context. Perhaps it would just be from these most recent touches to the top side. Perhaps it would be from the most recent low. And as we did with this formation, we took it from the top touch of the top of the formation. So let's say that price action evolves and we now take it from these lows. You'd have said you've made it to the opposite side, right? You've come from support and gone to resistance. And subsequently, you've come back to a 200 period moving average on this time frame. We haven't done it with the Fibonacci's to match them up, but we can see that in a minute. This is a good move up to the top side here. Obviously, it's a retracement against that previous move, but now that we've come back below a 236, we're able to drop this Fibonacci from these entrances here to these highs. You come back below your 236, maybe you'd be thinking, a similar profile would take you towards the golden pocket. That'd be the basis line of this channel, and that'd all match up with this overall formation. So in the early time frame, it doesn't look like anything unusual has happened with regards to breaking this overall trend defined by these two parallel downward sloping lines. It doesn't look like anything's changed yet. Just looking at price action. And then adding on the moving averages, you can see that there is an area where you might find like some support. You didn't find it to be resistance on the top side. It was in it around the basis line. This time it's above the basis line. So holding it would be bullish. It's got a slightly more positive posturing here in that it's a sloping to the top side and above this basis line. So, that's not in line with the idea of it collapsing, is it? So then you do have these ideas of things probably trying again. None of them are incredibly bullish or drive massive enthusiasm on the markets. None of these signals that you're seeing, they're just not breaking down signals. And so if it does push to the top side, it doesn't come with like an emphatic break likely. And that also adds into the idea of this right shoulder here potentially, which we saw on smaller time frames. We talked about it when we opened show with this idea of a complex head and shoulder. So you break down from these areas with the implied target, then that would take you in around the basis line of this implied target from that head and shoulders would take you in around the basis line anyway. It would take you perhaps beyond the golden pocket at 102. That's a psychological level at which point, there's targets and supports around 94 to 96 that are partly to do with this harmonic here. And the breakdown from the D point, which is the high of this formation, there's reasons to go there, but when you broke the horizontal and you've broken the psychological level at 100, you typically see things push on that little bit further. So you would maybe say, the bottom side of that target zone is 94, and then, the measured move might take you slightly lower to the previous horizontal in it around 87. That's definitely possible. If it all happened in one go, you would perhaps expect to see a bounce there. If it took time, then you wouldn't be ruling out it coming in and touching these two previous lows again. Ultimately, you'd say you'd broken through the 886 if you went below this previous low. That's the retracement against this previous move to the top side. And perhaps at that stage, you would be going on to test that low or more. And there being two touches here and those being significant, this one being after a test of the top side of the formation, you might then, expect it to come in and find some sort of bounce around those levels. We've also got a ray that's orange, which represents some sort of golden pocket somewhere on here. And also it's close to a 236 retracement. That was from the lows after the squeeze. Oh my goodness, we got a couple of messages here. And one from yesterday. I'll have to get into it. Oh, I've not got my twat box updated. See, that's no way. No, I didn't see it. How silly of me. Want to say thanks for all you do. Thanks very much, Hacksaw. Yeah, I do a lot. Thoughts on BBBY? And I do so much. I do so much. That's the thing. That's like why it is that the people like that cretinous loser and other people like they should be thanking me, but they can't because they're fucking. They're not in it. Last night we got a message from AVA. Last night was just after I'd finished the show. It said to twist in the interview. Ha, yeah, it's that good. That actually you should watch yesterday's show if you're ever looking for like. Tasks you might be asked to perform at an interview, having passed the interview. Really, it's mostly a test ahead of the job at the bank. As always, thanks for the stream and the encouragement. Yeah, I'm going to have to do a better job of that today. I've been like pissed off by stuff. Asking for a friend, just donated $10. Can we look at GLW this morning? Corning Glassworks. Corning Glassworks. Corning? Corning Glassworks. But it says GLW. Okay. Well, yeah, we shall do that. Asking for a friend. Certainly shall. Hacksaw Super Giant, $5. Once thanks to do that's on BBBY if you get a chance. If no big deal. Watching your streams are priceless. Thank you very much. Right, so we'll go through these. We're planning on doing this, you know, people will tune out and that, and they'll be like, yeah, I was only kind of giving him my attention anyway, and if he's going to talk about other things, right, anyway, so especially people who hate AMC, which is like, you know, very few people who watch me would hate on GME, but there are the odd person who don't like AMC, so I'm trying to keep everybody, pull you along anyway, right? Maybe I'm doing this wrong. I went through KT, Korkacha. Spy turnaround or going to 363? Good question, Luke. So we'll just finish up here on the hourly and then maybe go through up quickly through the others, right? 1 hour time frame, GME 126.71, right? It's just in a range, doing nothing from its open, and there's a gap to look to on the hourly time frame. We've talked about this. No, we didn't. That was a half hour. I can't remember anyway. This is downward slope information. Lower lows, lower highs. 1, 2, 3, 4 at least now. If you retrace back beyond a 236, 236 at this stage is perhaps, you know, where's the low within this formation? You couldn't take it from here. You'd say this is the high. This is the low. At this stage, you're looking to break a golden pocket. This previous retracement broke the golden pocket of this Fibonacci. It hadn't put in a low down here yet. As you can see, it just went to the golden pocket, right? And then you put in a new, like, again, only really reached the golden pocket. It didn't exceed that. And then you go into the next low price action, tested 236 before it broke down through that low again, you know, so really that wasn't a local low, this was it, and as such, right, you've had one low, a retracement that didn't exceed the golden pocket, and then you've had another low, and price action came back up, didn't manage to exceed the 382 on the first touch, put in a subsequent low, right? So like the trend hadn't really changed there, just an oscillation up to 382. Sure, it's a local low because it broke the 236, but it didn't manage to push higher than the previous move. So the trend continued, and as such, we'll go to this Fibonacci low, and that's the high again, right? Still starting from the same place, and the oscillation didn't break the golden pocket yet, right? That's that. Then you came in, tested that low again, pushing back up, and at this stage, a 382 it's beyond there. It's beyond the 382. It's up to the 50%. Is it? No, not really. You know, so it's like no man's land with regards to that overall fib, and similar to how it was in the inflection, like between inflection points on the previous side of things. So everything's continuing. You know, continuation is what you're looking for as a trader. You have one share, and now you have 7, as far as I understand it. What's that? Is GME 7 for 1 dividend mean you multiply your existing shares by 8 or 7? It's a 3-to-1 dividend. It's a 3-to-1 dividend. And if you had 1, then you have 3. Hopefully, Houston Wade said multiply by 8, but I thought 1 into 7. Right, so there is outstanding. The float of GME is like 63, and you know but the available shares they've currently got rights to issue like 300 million, so they're increasing that rights to 1 billion or whatever it is, and it's 3-to-1, not 8-to-1. Has the dividend been announced officially? I mean, what does that mean? Like, yes, they've officially announced that they're going to have a dividend split via dividend, but that process for it involves a record date, which hasn't yet happened. And so, like, I mean, you're saying like the process itself is more nuanced than just announcing it officially. Of course, you're looking for more than that, and no, the next parts of it haven't happened yet. Hopefully they don't do it yet. They won't do a 741 at this price. Well, they've already outlined the ability to do. They don't have the, you know, why are people saying this 7-to-1 stuff? Like, why? The intent, but no numbers or dates yet, right? They've already outlined the ability to do the split, and they're not going to change the terms. Did they say it was 3-1? I don't know if they did. I don't know if they said it was 3-1. They tried to say they're increasing it to $1 billion, right? There's $1 billion. That's what why wouldn't they? What do you mean, why wouldn't they? So you're asking questions now from right? I try to help, right? But you're going to have to, articulate your question better, or at least give some reasoning for what you're saying. Do you look at OPEX at all for price improvement? Hello, Jens. Ortex for price improvement. What does that sentence mean? What's wrong? I don't know what that sentence means. Stephen C. Guy, thoughts on OPEX and possible upside next week? Jens and Stephen, my thoughts on OPEX are a piece of shit. They're scam artists. They push their stuff via popular YouTubers to get people to sign up to their subscription stuff that they absolutely definitely will never provide you with price improvement, Jens, whatever that means. I've never price improvement. And I've heard that phrase twice, and both times I was working at the bank and people were joking about what we now try to expose, price improvement. But what do you mean? Ortex provides short data that's like their own way of collecting it through market participants. Those people like that they get that information from are incentivized to provide it, and also are quite aware of the fact that it's going to eventually make its way to this arena. I mean, Ortex is a joke. Hey, I'm out here there's definitely a way of me talking about this stuff. Option expiration, not Ortex. Yo, what about option expiration? Were you asking? Sorry, Stephen. Thoughts on OPEX and possible upside next week? OPEX. Oh, right. Option expiration. Pardon me. Yeah, sorry. What do I think about it? Yeah, well, it's quad witching next week. The inflection points we're going to talk about SPY in a minute, like Luke asked, to see what does he think it's going to. Hopefully it's not done too much in the meantime since he asked. 368.73 down 2.79% so far. Okay, that's 10 points. What was that question there? Oh, what think about it next week? Yeah, it's not next week, it's tomorrow. It's Friday. And treasure map ideas have only severely cost people money. True story. Ortex is meh and options expiration meh. Yeah, so the cycle theory has not worked, has it? My idea on the options are the quad witching, you're likely leads to greater volatility in around those times. That's what people expect. It's very much sort of risk off period. We're hoping for an inflection point on SPY, and there's a massive close come in tomorrow. Like huge amounts of open interest will be closed tomorrow. So it's open interest to look at. Yes, a lot of that is, it's all derivatives market, and sure, I look at option expirations for regards to lots of things. It's particular, I look at option expiration data, and I look at the max pain. I look to see where the open interest dictates that area, and then I look to see where price action is, and then I like to see what that means with regards to liquidity going forwards, and if that combined with the trend and direction tells us any more information. Literally always tells you something that's helpful. With regards to options that are expiring tomorrow, I don't have any. I wouldn't hold an options contract unless I was planning on exercising it. I wouldn't hold it 10, 14 days before expiry. I wouldn't hold it, nor would I recommend anybody else does that, unless you're throwing, it's like a very much a gamble in play, in which case it's fine, right? I also enjoy throwing water balloons at people and stuff, right? There is stuff that, that's like, why doing that's going to get you in trouble, but you enjoy it for the moment in that, right? Or the member berries, right? Hit him in the face or whatever, right? There's having fun in that, but it's not sensible or what I would advocate doing on the internet. So what do I think about option expiry? I think it's tomorrow's quad witching and it's likely greater volatility today and tomorrow, and so there's that. Also, what was the rest of the question? What was the question exactly? What do I think about it? And then you said next week with regards to, did you? Option expiration, Ortex, Steven. Hope it didn't come across as annoying, Jens. I don't like Ortex and I don't like the whole way of doing things. Thoughts on OPEX? I also think it's I think it's like anyone who wants you to exclusively focus on short interest and doesn't in the same breath, or if it's a video, at least once in the same video. Now, I've literally never seen it ever, right? But if they don't at least once, and they never have done, mention open interest, the total open interest, when they're mentioning short interest, what the fuck are they talking about? What what are they what are they actually, what's someone trying to tell you when they mention the short interest but they don't mention the total open interest? What did wow, it was great, Chicago Bulls this week, 17 points. Did you see it? Amazing. I mean, what? It doesn't mean anything, right? It doesn't mean anything, does it? Especially if they lost 200 or whatever. I mean, what's going on? So I hope that, and again, what I was trying to do there was to apologize to Jens in case it came across the wrong way, and then I immediately did the same thing again, probably came across the wrong way. So, sorry, Jens. Stephen, thoughts on OPEX, and option expiration. My thoughts are, you really should have been taking profit at 153, Like, I made a video about it, because it was coming up to close, and that was the time to take profit. That was that. Over that, I'm not sure. Cyclical Theory is on point. If that point is like, if what you're saying is on point, when you mean like the cycles, they have the dates correct. Yes, they're published dates that when it's the way it works with quarters, right? And you get like different option contracts with different periods of time and different types, like commodities, equities, and as such, there are dates in a calendar that you can point to years in advance and say, these are the dates where there will be this cycle, and that cycle of closes, and that, right, as that's what that cycle, that's right, that's correct. The idea that cycle theory itself is correct, right? The cycle theory on, for example, on Superstrong, that's demonstrably wrong. It's wrong. It's demonstrably wrong, and there are few things that have cost GME holders more money than cycle theory, right? Surely you would accept that, right, Jens? I mean, I'm on your side here. Really, I am. And I'd say, can you honestly say there's anything that's pro-GME, ostensibly pro-GME, that has cost GME traders more than cycle theory? Can you? Tradespotting, where would you look for price action to hit for us to confirm a break of this huge downtrend? Thanks for what you do. Yo, Protein Far. Got lots of questions to get through. Swap contracts. ACE. Credit default. What happened to AMC? I don't know. Did anything happen? It's at 1189. So it's still above where we said it was going to. Sugar, hang in there. Acid was taken. How you doing, Acid was taken? Rock up. Options can move markets, sure. Yeah, but because people who are buying and selling those options will be greater incentivized to interact with the underlying being what the price is. Yeah, the underlying being I don't know. I'm joining a conversation halfway through. Cycle theory is on point. They do have ways to push out obligations. ETF creation is off the table as well. Creation, which is one of their main methods to suppress the price. So the way that ETFs work, it's like you'll have maybe seen my interview with the Gist where he directly asked me about this question about the ETFs, and we talk about the volume that went in and out and the changes on the chart at the time we discussed this, and showed that there was like suspicious activity, but then it's massively overplayed. Right, it's massively overplayed its effect on price. It's also you're conflating those parts of that dynamic that are relevant to cycle theory. Like, you are, because it's attractive to say, well, and I understand, like, this is when that sort of thing would happen. It's a natural consequence of the way ETFs are the rebalancing within them, and the shares when they're actually collected and added to ETFs, the times at which it happens. It's a natural consequence that it comes in around the same time that these dates that you would see from cycle theory. So it's not like, one proves the other. They're both like, right. So, and the way that the ETF stuff goes is often, you can't hide a short share in an ETF. This is what some people don't seem to understand, right? You can't hide a short share in there. So the way that people understand the manipulation via the ETFs seems to be wrong. And this is also something, and me yourself probably not, Jens, right, to be honest, because you seem to be coming from a point of view of somebody who's at least done the research and looked at the DDs and whatnot themselves. But a lot of people don't actually understand the ETF thing, and they think that somehow it's hiding short sales, Oh, Mango, he tweeted about having no evidence of fake shares. Right, okay, that was the AMC thing we're talking about. I feel like Cyclical Theory played into the new investors' lack of understanding of their own options, trading expiry dates, and fucked a lot of innocent people trying to learn. That's definitely did. Cyclical Theory is the theory that markets move in cycles and has fuck all to do with options. It's true. So the DDs borrow the terminology nomenclature from other things, and it's ambiguous. When they do that, confuses new traders as well. So the whole thing is creates this huge distinction, right, where you'll get people who do like legitimate TA on the internet to try and help people and have done for years and understand all the concepts and have worked in the environment before, and then you get people who have got like the idea of what it might be like and are playing a game, and like they end up costing people loads of money because they don't understand the concept of harm that they might be doing. They don't understand that concept, and if you put it to them, they would they would be entrenched in their position. You can short an ETF, yes, and at the same time long everything except AMC GME. Yes, you can. Yes, you can short an ETF, so you can hide your short from that aspect of seeing it on the market, but you can't hide a short in a share in an ETF, right? Or whatever it is that idea was back then. So yes, you can do that, right? It's a good way of if you're short in an ETF, you'll know that that exchange traded fund, of course, has other shares in it, and if you want that mechanism to work properly, you're going to also want to then have, manage that reality of all those other shares, all those other companies in those ETFs. So like they can look at that and you can see like where it is and isn't likely certain things are happening. That's all I'll say about that for now. Again, Alex, that's not what Cyclical Theory is. Hello, Alex. I feel like Cyclical Theory played, well, this is not that, it's not that, so there's two words, right? There's the Cyclical Theory as what people talk about it on Reddit, let's say, and then there's cycle theory, which is as Rocky says, itself has very little to do, or if nothing to do with option expiries. I mean, there may be waves and whatever and stuff. And do you have a price target for GME end of day tomorrow? Probably. I keep getting the XAV wrapped on my option buys. Please be careful with your language. How fix that? I am hitting my trends, but not at best value. I keep getting theta on your option buys. How to fix that? How to fix the theta? Sell the things. I only trust you guys on this type of TA. Yo, thanks. Like, you don't want to be exposed to great theta degradation. Like, so when are you buying these option contracts in particular, and what are the expiry? Like, how far out are they when you're buying them? And what's the trend like when you've been buying them? And at what value did you buy them? I mean, theta is just like time decay, and so get rid of it quicker is the simplest answer. Or like a slightly better answer is buy 3 months. Okay, 3 months is like not terrible, and you've been buying it. So in the last 3 months, it's been this awful downtrend, right? It's been an awful downtrend. And if the expiry was any time that's happening or happened recently, you had a positive inflection towards the end of it, but not enough to recover the capital that you'd have invested buying it when it was like a higher underlying. Right? I mean, the theta's Raj, right? You'll get volatility will increase the price and will at those periods like somehow recapture some of what you've lost through theta. And when it gets back to your break even and you've spent months going at good price, because you get the feck out of it, is what I'd say. So you can't set us there. I mean, the way you would trade against it would be you'd hedge with the right setup on the right option contract or the right I think the way to do it would be to exploit volatility, trade to exploit volatility. And that's what I've been saying really with regards to GME. I mean, a lot of people have been selling covered calls, which is fine. And that's great. It makes lots of people lots of money, but it does leave you with the risk of losing your shares. And then if the prices are like in an uptrend at that point and you've misjudged things, which oftenly happens at the bottom of a trend, people selling covered calls and that they all get exercised. That's often at a trend inflection point, and they regret that situation for like the next period of the trend. It's really annoying for them for a long time, and that can happen Happens to lots of people. The other ways of doing it are just setting up like an iron condor, taking advantage of the volatility and doing it in such a way that like is spread out over a longer period of time, so that you're not constantly having to manage the position because of theta decay. Tradespotting, what is your price target tomorrow for GME? Wow, tomorrow being the 17th. Wow, have you got contracts expired tomorrow, or are you about to buy one or something? So what have I been like today? This is like weird, right? What's up? So early time frame GME, we spoke about this and everything's fine. Right, we've done that early. Did we do that early in AMC? We're talking about this holding demand lines and this being pushing to the top side, and this formation being defined potentially as like a channel, as you can see on a number of things like Tesla, right? It's potentially, right? Not going to see it there. We're going to 5-minute time frame. Oh, you broke out of it at the start, right? This is what they were doing yesterday. They were in potentially in that, and you'd look to the demand line and upward sloping formation. GME, it was in its own one. We didn't say anything about it other than illustrate that point. That it would be the demand line you'd be looking to. AMC, it was also in a channel, and it's broken out of it too. Okay, right. So, on the early time frame, we'd got to the early, and we're on AMC. Boing, boing, boing. We're saying the bottom line of these formations are what you would look to be measuring, and this 3 touches here higher on 1, 2, 3. I can see that the most recently you've got bullish divergence between these lows. Should this be like entirely a downtrend? It's not. It's actually an uptrend, and as such, different inflection. But it does give you a reason why you would have perhaps pushed back up to the downward sloping trend you see here. Having met that, you've seen a rejection. Now on the lower term time frames is where you're looking at, and how's this going to work? Well, it looks like it might actually be about to fall over and come back down. That's a rejection of the bullish control zone, having touched it once and been much lower on price there. Lower, but much lower. And then 200 approaching the 50 simple and getting rejected itself. So spread down, it's a little bit more obvious. There's the 50 simple rejected from 200 so far. Great, great, thanks. Superchat $5. Thanks very much. And you keep asking me questions before. Please do one video on Iron Condor. We'd love that. Okay, I'm done right now, and I don't know that put hedge trade to exploit volatility. Freaking yes. Put hedge. Tradespotting, what is your price target for tomorrow for GME? Okay, my price target for tomorrow for GME. So 114, 115. That's what I'd say at the minute, just now. You're drunk already, Gape. What are you doing drunk at this time? Jeepers creepers. Somewhere around 115, maybe. I mean, that's just an answer for somebody who's desperate for an answer right now, but I don't know what it is. Please drink responsibly yet on Flushings. Why would you drink any other? I don't see why Ryan Cohen wouldn't authorize 7-1. He will have plenty left over even after this ratio. 7-1. Why would we want a 7-1 as opposed to... So 3-1's plenty, right? And why do you keep saying 7-1? Why do people keep saying 7-1? I understand, like, there's plenty of shares in the treasury, and are we not looking for outstanding shares to be the 300 that are available to turn into 300 million to turn into $1 billion? That's around 3-1, isn't it? I mean, 300 billion is what they've got the ability to produce at the minute. If you're saying $1 billion because there's currently just under 70 million issued, and you think that because now they're asking for $1 billion, that means that it's 7-1, then that's the wrong maths. People are doing it wrong. 7-for-1 is some super stonk theory. I don't know why people are saying that. It's 3-1. It's been 3-1 for ages. RE3 tweets at 741 computer share address as 741 or something. 7-1 is better because you have more shares to sell in a squeeze. Because you think that they're going to go infinite prices. So I see what you're saying. It's for that reason, right? But then you also understand that that's not like the entirety of the situation. It also means that there's 7 shares for every one, and that means that some people, like a big chunk of them, I would even hazard to guess the majority of people at 7 to 1 will think, I've got so many of these now, I can afford to sell some of them, and it'll provide greater sell side liquidity. It'll make it harder for the price to go up. It'll add further pressure to it over a longer period of time. It'll provide those people who do want to escape from positions greater proportion of that position to be closed due to the greater sell side liquidity. I mean, 7 to 1 according to 3 to 1 on a market dynamics perspective. If we're looking for an infinite squeeze, this is a really, really poor governance. That would be really bad way to manage the company. It'd be really poor strategy to do a 7 to 1. It'd be terrible. It would be the worst possible option, especially when you've got a perfectly good one there and 3 to 1 right next to it to choose. And then with regards to like actually trading this and hoping that there's not, not talking about the market dynamics with regard to MOAS, but just simply the idea of like we want it to trade it and reduce the float as much as possible so that there's a higher degree of volatility, and so that when there are instances of, a little bit too much an imbalance in the open interest and it looks like, there isn't going to be the availability to cover within the given before ahead a certain expiration. Things like weak, globular, nebulous suggestions like cycle theory or, what's this option expiration date going to do? They actually have more oomph and make a difference and like having a degree of more credibility. So like 7 to 1, I voted for a split via dividend because it seemed to suggest and was pretty clear to me to be a 3 to 1. Had they been asking us to vote 7 to 1, I would have been less enthusiastic. Let's put it like that. Less enthusiastic. I perhaps wouldn't have said in advance what I've just said, but I did say, and I will say it again, if they do a split when prices are low, that's also really poor decision making. It's true to say that companies, when stock prices are depressed, that do share buybacks generally outperform their peers. Those that do the opposite, i.e. a split, generally underperform against the market. So you can look now specifically at Tesla and Amazon and look at their decision to do a stock split during a massive crash in prices, and you can look at how that overall performance going forward is related to Apple, who decided to do a massive multi-billion-dollar share buyback at the same period of time. Both tech companies, all three tech companies, all three existing and making those decisions at exactly the same time. So those are things that you can look at, and So that's that, right? That's what I think, right? I don't even know what the question was. That's what I think. So there's the answer to whatever the question was. Agreed at this price, it whack brings us dangerously close to 5 billion, right? So I've always gotten screwed on stock splits, lol. Yeah, well, I mean, the enthusiasm, right? The event-based news enthusiasm and that, a lot of people tend to buy it like as soon as the news comes out, but then, share prices will, like, generally speaking, be depressed in the run-up to that actual event. And then afterwards, they'll generally, on SPY, go up between 17-20% over the next. So, like, there are ways of managing it, just generally understanding how event-based theory works. But with regards to, like, being emotional and excited and whatnot, doesn't necessarily help your trading. Obviously, if that's what's happening, definitely try and help you with that. My friend, not going to lie, if Gme was like $30, I don't think I could tame myself. Yeah, I mean, this is, like, but then... So like I've tried to buy as much as I can all the time, I also want to make it obviously when it's the best time to buy it on the chart. But the way I look at it is essentially like, well, I've got this much money to spend on it, and this is like what I think the chart suggests is a good entry. If it being $30, it would just mean more of them at the same. I would be spending the same amount of money anyway, personally. Also, it would not be in interest of the company, is therefore extremely unlikely. What are we talking about? But then if GameStop wanted to give away its money in the bank to the shareholder and dilute themselves, then they look at larger numbers. Unrealistic billionaires don't do that. It is unrealistic, I think. And none of it's been announced. They have about 300 million and they're upping it by 3 or so to 1 billion. Yeah, exactly. So that works out at 3 to 1. There's no 7 to 1 in the maths. There just isn't 7 to 1 in the maths. I don't know why there's so much mistakes around understanding here. That's a good point you make. 7 to 1 is better because you have more shares to sell in a squeeze. That's true if we're looking at the fact that it's going to go no matter what. It's going to infinite numbers, and if it's 7 to 1, you've got more that you can sell. But if you can sell them for any price, that'd be redundant in the first instance, wouldn't it? And then secondly, having more shares adds more sell side liquidity. So we want to limit that to a degree. We only want the mechanism that drives the people to have to scramble for shares, which is why they're being distributed as a dividend. And there's no reason to distribute them as a dividend on a 7 to 1. That would be a huge dilution of your company. And like Rocky says, it'd be literally throwing money away. I mean, they're being generous, but they're not going to be like generous to a fault, like harm themselves, right? So we got up to that to talk about your boy's question, Gabe's question. Thanks for the instruction. Fax there. You can fax me. Links are in description. You can fax me. Fax me. You don't even need to have your own fax machine. You can just follow links in description. It's amazing. You can do it for fun. It's well worth the fun. You should try it. That shouldn't matter because cascading liquidation of hedge funds will drive price upwards even if people decide to sell lower. This is all theory, by the way. That shouldn't matter because cascading liquidations of hedge funds will drive price upwards, right? If you've liquidated one, right? If we liquidate one, and if if that liquidation is so to a large extent that it leads to the prices getting pushed up so much, it liquidates another, and that cascading liquidation of hedge funds that we're looking for, that only happens if people buy and hold. Yo, Gabe, there's a nice headband on you now. Listen, Jamie and Rocky, thanks. So, what was the question? So it shouldn't matter, right? It shouldn't matter, i.e. what the people have got more to sell. But it does matter, right? It does matter that they've got more to sell because they'll sell it. And that means that there's greater like sell side liquidity, which will have a huge effect on the price. It'll mean the share's own weight of the share, its own relative gravity will increase because the sell side liquidity has increased. This is exactly why Apple are doing a share buyback. Apple are doing a share buyback right now. So, the idea that it doesn't matter because there'll be a cascading, right? Sure. Sure. But that's not going to, do you expect, this is a question for you, do you expect that as soon as the split happens, that's going to cause MOAS? Do you think that that'll happen straight away? That's a $2. Banana. Thanks. Thanks, Mrs. Anonymous. Do you think that it'll lead to it immediately? In which case, fuck it, right? 50 billion to 1, right? What does it matter, right? Because, immediately they're screwed, right? They're not going to find 499,999,999,999 shares, are they, right? So let's just do it 50 billion to 1. No, obviously that would be silly, right? And so it's probably not going to happen immediately upon, right? And that trigger a liquidation of it, which does the next one. Probably not. Probably not. The mechanism one of the ones that we're looking for to happen there is that this 3 to 1 split will also, as well as having a very incentivizing reason for people to buy, right? And then a positive relationship then with the board and the company because they've done something very good for their shareholders and rewarded them. And that will not add then detrimental to sell side liquidity and will force those companies that are currently short to then provide the dividend to the rightful beneficiary, right? Which will mean that if they're naked short, then they're going to have to go around collecting shares, and you're going to have to do it 3 to the current liabilities that they're at the minute. So you're going to exposing them 3 to 1 to the current liabilities, which means that if they've even margined for and have insurance over their fucking illegal activity, it would need to be 300%, right? And it's very unlikely they're going to do that because they wouldn't be taking these kind of risks if they were able to make that kind of collateral provision, which comes with that sort of opportunity cost. So people that are greedy tend to be greedy in more ways than one. And as such, we're hoping for there to be some sort of a mechanism. But that leading to an immediate liquidation for hedge funds that sets off the dominoes running on that day at that moment in time, highly unlikely, partly because... Yo, Mr. and Mrs. Anonymous. Partly because What we are looking for, right, and I would say this up front, is that when that split happens, you aren't diluted, nor are your option contracts diluted. They'll go 3-to-1 with the strike price cut commensurably. And then what you'll be looking at is those people may or may not exercise right ahead of this split. The market makers on the other side of the trade won't be aware. They're going to have to hedge for the fact that they all might, or at least a considerable amount of them will. So they'll add to the buying pressure. At the same time, people will be buying the option contracts because they have got cheaper. So they're more affordable to buy an option contract with a smaller capital level for the beginning, right? Because you need to have a certain amount to cover, like if it's a cash account, you need to buy, if you're paying up front and you're not going on margin and you're buying an option contract, you're paying whatever it is, right? Say it's $20 per share and there's 200 in it, you've got to do the math. You're going to need to have all that money yourself. So like if that was $20 on an option contract for a expiry in say July 22, whatever the dates are, like 23rd or 27th. I don't know when the dates are in July expiries off the top of my head, but let's say it's in around then, and the current price of and you're looking at for an expiry of say 300, and the price of that option contract is currently $20 or whatever, right? That option contract will go down to like a strike of 100, and you'll have 3 of them. At that stage, you're thinking, right, that's way more affordable than the $20 times 100. It's now $20 times 30, right? It's way more affordable. That total option contract itself is like way cheaper to you, and that makes it's available to more people to buy and trade that on cash accounts, right? And like trade it with like lesser degrees of margin or whatever. So it makes it more accessible, and we're hoping that adds to the buying pressure. And that happens at the same time as these market makers are exposed to providing, and the people who are short are exposed to providing the dividend. They're forced to then collect it, which drives like added buying pressure at the same time. And these things create an upward momentum, which at the same time adds to the capital, the total market cap of the company. At the same time, the board do whatever it is they need to do to get into the S&P 5, right? And then we start building a gamma ramp, right? From that point onwards, that'd be fantastic. That's what we're looking to happen. These sort of mechanisms to kick off. It would be great then if that split happened at a time when prices were already high, so that we were getting like the best reward as shareholders. We were getting the best reward. It was having the least damaging effect, and it kept everyone positive. So yes, Corning glass. That's what we're going to look at. Thanks. Oh, sugar, I just didn't read the message. Now it's disappeared. And we've got other things coming up here. So I was answering those questions, which I don't know why I was answering them the way I was, but that was it. Banana. I think I may have been a little too patient with Gme and missed my opportunity to buy in at the 100 area. Do you see prices getting to that level anytime soon? Thanks. Yes, I do. I see them getting to that level sometime over the next wee while. I see that Gme price is 115 potentially. Tomorrow's close. This is lower high situation combination with previous lower highs. You're below the 50 simple period moving average on the weekly time frame. The 200 looks like it's asking for support. It's down at around $63 at the minute. Could well be that price actions persist in these levels for a while, pull that up, and we get a test of it around a previous low at 77, or you come down towards this area and put in a higher low, but you're below the 50 simple and you're currently being rejected from it, and you're below the center line RSI, which is bearish. Onto the daily time frame, this 50 simple holding price action is below the 200. That's a negative slope, a negative splay. Price action itself's like not doing very positive, only barely managing to hold on by its fingernails. You would be looking at this candle on the bottom side of it at $90 and thinking maybe that's interesting. 4-hour time frame, just looking at price action alone, you can see like there's the 50 simple approaching the 200, price action coming down to meet them both. This is perhaps an inflection point. You had it one time before, you're getting it another time now. Subsequent to that, you've had another oscillation at the top side, which has been lower than the previous one. That's not positive. I mean, all of this is happening as volatility has been building up. Could be that you have a large move. If that large move was to the top side, you can see pushing up to 200 be your high and pushing down to the low in around $90 again. This previous low, should you break it, 78, and this oscillation here, 75 or whatever, right? These are all very potential levels to potentially get to. And the time to be thinking like, oh, sugar, maybe I won't get it, might have been in around these levels where it met a previous high and there was still something left on the trade. After it put in this divergent high here, it was a very strong signal to get out. It broke the 200 period, moved oscillate to the top side, but the general market took a little bit of a bump at this stage. I wouldn't say that's necessarily positive for GME, and at this stage you're seeing it look like it's rolling over, and you know, I wouldn't be buying it before it got back to 102.94 based on current price action. So yes, that's what I'd be saying. So now that was that question answered properly, I think. And shucks, if you didn't get it back at 100 and you think you've missed it, then there's maybe upcoming volatility tomorrow. If that moves to the top side, you know, I wouldn't be buying it at resistance, but we'll see what it looks like in advance. There are support areas. Tradespotting, I deleted the current comment, thought I was interrupting. It is Gorilla Glass Maker, an old innovative company, GLW. Cool, great good to know, right? Let's look at that now. Acid was taken. Here's a gallon of gas. Cheers. Thanks, acid was taken. That's very good of you. Thanks. Right, so I hope I haven't pissed off too many people today. At least not the wrong people. At least not the wrong people. Well, what have I missed? Right, Mr. Anonymous. The Gme $100. Banana, Mrs. Anonymous. Thanks. Acid was taken, gave me a gallon of gas, which is very good of you. Thanks very much. Grape, $5. That was cool. And you remember now, appreciate Grape. How you doing? 1.5 swings, percent swings. Those are the volatility swings based on LIBOR. Please don't listen to me. Don't listen to me. Right, are you talking about LIBOR rates, hot money or something? You know, but LIBOR, it's the inter-lending rate between banks. That's what they charge each other to borrow money. Why are we talking about that? There's loads of people manipulate that. Somebody, Rocky and I personally know somebody who manipulated that. Funny story that. Asking for a friend, just need $10. Can we look at GL this morning? That one and Hacksaw for BBBY. All right, so we are doing something, right? So we'll start off on GLW because it came in like 45 years ago. Cornering Incorporated, this is it. Oh, lows there on 4-hour time frame. I can see that that's been bearish control zone RSI. You've got a flash buck up at 34, 5 spot 4. Volatility has increased, but that's only led to that simple oscillation. The volatility is expressed in the lower low and the range of the downside candles. My steeper decline overall. So this thing filled a gap here. Right, start on the weekly time frame. Boom. Come over here, keyboard, please. Weekly time for Tradespotting. GME just at the 122 resistance you pointed out. What the frick? Oh, I'm on the weekly time frame. I'm not going to see anything. I'm not going to see anything on the weekly. Right. So clearly there's a gap on the 5 minutes there. Oh my goodness. I wasn't looking for the 5 minutes, looking for the weekly. Get a picture of what's going on here. Yes, so it has been around for a while. You were right, KT. And who was this asking for this? And asking for a friend. It was asking for a friend. Here was this. Right. Just a huge cycle in around these periods of time, eh? Brutal. Technology companies getting it bad. Anyway, right, this was awful. Wait, this was awful. And the dot-com bubble and crash entirely of their own making, right? Yes. So this was the high. This is the low. If you come back to your 886 yet, yes, sir, you made it to your 886. Congratulations. And celebrations. So that's that. It's not blue, it's pink. Ding ding doom. It didn't change, it changed to fib. I didn't want that to happen. Now my fibs are the wrong color. Oh my god, this is a terrible news, folks. This is terrible news. We've changed the fib color. Okay, sorry. I have to go back now and fix this. Sorry folks. This just has to happen. Whoa, no. Get back on there, you idiot. Bloomin' heck, right? That was really, really scary for a second. Ugh. No, the 382 shouldn't be that color. I knew this was going to happen. 382. Thanks. Okay, so the 886, and that's, you're supposed to be the pink thing. Okay, we're catching up now. Great, stop doing that if you're drunk. Thank you very much. It's very appreciated. Bzz, 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 bzz. Thanks, Grape. I keep calling you Grape. Sorry about that. This is supposed to be Purple. Yes, I noticed you say don't listen to me, I'm drunk or something earlier. So in which case, maybe you're doing this drunk, which is not responsible. You got to be responsible, Grape. Yes, shut up, Tradespotting. Right, 886, this 886, that's where it's made it to, and it's had a bit of a bounce. That's what you expect. Cheers, my lord, Tradespotting. Come reminder, you're past the 1.5 hour mark. Oh my goodness, what am I even doing? I have to provide value, plus I've got loads of questions to answer. I have got to do work still. I wish I'd finished sooner. I wish I'd done better. I've done it wrong. I should have done better. Right, so you're talking about this GLW. It's come into the 886, the retracement from its previous high, which was back in the year 2000. And subsequent to that, on this time frame here, we can see it had a flash. It came back, filled that in. That pushed lower than its previous low as well. Had a big push down on the oscillator. I could spend my money how I want. It's a true story. You can spend it how you want. You can. Okay. I just want no. I never want anyone to regret anything. You know what I mean? So here's the golden pocket and that support there. Previously, this was at horizontal levels. Looking left, it's finding hot support at previous horizontal levels as opposed to this greater fib so far. And probably there's other areas to look at within it. That was the move to the downside. Subsequently, we've come up and we've nowhere near reached the 236 yet, right? Right, the 236 would come in here at 1935. That's a huge chunk off where price action is at the minute. So we'll have to pay attention to what the current trend is and figure out what's going on smaller time frames. Weekly, generally speaking, it's been in an uptrend for a long time, but it had put in a high back in 2000, 22 years ago. It still hasn't beaten. It's unusual for something to do that sort of thing, recover, have a exclusively positive trend to be over 2 decades and it not to test its previous high. That's unusual. And not if you live in New York and want to buy some crypto, apparently. What does that mean? I want to live in New York and I like buying crypto. It makes sense to me, but it does seem a bit convenient. Confirmation biasy. What are we talking about? So does everything. You got to be dodgy with that. Here's why he's a nice guy. He's a nice guy. Barclays were key players in manipulating LIBOR. The bosses got off and the whistleblowers were charged. Yeah, the whistleblowers got charged. It's a good way of doing things. We've got away in Britain, right? Stiff upper lip. Over the top. Come on, lads, over the top. Officer class. We all get jobs at Barclays. You see the officer class from the First World War. They all got jobs at Barclays. They went home and got the Barclays jobs. Why would markets collapse causing GME to rise? The idea is that GME is a safe haven and a store of value because there's naked shorts or shorts that can't cover and or shorts that won't cover. Yo, Proven Crown Builders, thank you very much. And so the high is when they invented Gorilla Glass. Yes, well, the high is the tech bubble. And then this is the low when everything bottomed out afterwards. I mean, come on. Interesting though. Yes, that's when they invented the Gorilla Glass. Right, great. We've invented this new product. It's going to be on every phone for a generation. And as such, that means your prices are going to go down. Boom. Right. Thank you very much. Welcome, Proven Crown Builders. Thank you very much for being here. No, you don't want to live in New York. The sports teams suck. Weather sucks. Traffic sucks. Train sucks. Though trains are pretty cool. I've been on trains. I like them. Scottsdale is the best. Disease. Does it? That's interesting. No, you don't want to live in. Oh, so I do though. Sorry, Gabe, I definitely do. But Tradespotting, the high is when they invented. I also want to live other places though too. You know, big priorities and whatnot. But best laid plans, right? Eh? Yeah, it's amazing. Tradespotting, the high is when they invented Gorilla. Okay, I read that. I'm not here to read the chat box. I'm here to do work. I'm taking too long already. Yeah, the 86. We're looking for it to hold the 236 on this Fibonacci here. For this to continue its current uptrend and push towards this 91.73 level. That's what you've been looking for since the year 2002. Thanks, GLW. Tradespotting. I bribed Sarah. Awesome. That's a good person. She's legend, Sarah. So this, like we say, higher highs, higher lows. There's nothing to worry about there. There's the money flow index telling us recently. A lot of distribution there. Money leaving the market. This also a divergent high. And having written meet the 886 from this important Fibonacci, I'd say that looks like it is coming back down to $20, right? That's just like, looks like it's fallen through the center line RSI most recently, having met the 200 period moving average. That's like one thing that suggests that the 200 period won't hold. Looking left, there's literally no horizontal levels here apart from its previous. Like, if it does bounce, it'd be the first time it was putting in support. Yo, a flying pair. Thank you very much. Ace Ventura, appreciated. I've missed another message. I'm missing messages here, so I am. I'm a message misser. Hey, Mr. Message Mister. Keep, thanks. That was that one. Thanks, Keep. And Ace. Thanks, Ace. And what was I supposed to be doing actually at the minute? JLW, yes, right, okay. So it's divergent high there. It's had what looks like a rejection from trying to get back into the bullish control zone at that stage. And then it's pushed through the center line. That's overall quite bearish. Its previous low, quite close to where it is at the minute on regards to the RSI, have obviously pushed, like, as you can see, lower than your previous push on the RSI. The price action has, but the RSI itself isn't lower, so it's not great, is it? It's not great. Just straight lines with gaps in the middle. So this isn't great. It's also coming after the period of a bit of bearish divergence there on the weekly time frame. You've gone through the center line, your 1 year moving average, you've got a negative picture on the histogram. You have got a potential cross coming on MACD. It was most recently rejected as it met the 200 period moving average. That's an early signal it's going to collapse. There's your stochastics pushing to the top side. They're going to turn around as price action falls through the 200 and give you the perfect sell signal. And that on a weekly is really, really big. To see that happen as you're hitting in the 886, that's like, it suggests you might not even hold this 236, right? That might be a 382, which would suggest prices coming all the way back to $11. Oh my goodness. Oh my goodness. And then, you know, the horizontal level that matches up with that, 1680, nope. In around here, 1346, nope, still not really. I mean, the horizontal levels that you'd be looking to on this thing, if it did start falling down completely, would be in around $8.33. And if that doesn't hold, I'd be looking to the previous low there at $5.90 or this golden pocket in at around $4. Oh my goodness. I'm only looking at the weekly time frame. Anyway, volatility has been picking up. You could conceivably see another big chunk of that and that take price all the way down there at $20. That'd be 30% off price action at the minute. The distribution here is quite hefty compared to previous amounts. Like, that's what pushed price down that much, this amount of distribution, right? You're meeting important moving averages and whatnot, which might cause it to, like, you know, pause as part of a trend that's currently in motion. This stochastics, we talked about it, okay, weekly time frame, it looks really dodgy. If you're buying it right now, it'd be crazy. On the daily time frame, you've got more of that bearish divergence. You've got price action then putting in a downtrend with lower highs, lower lows, and breaking through the center line, pushing towards the bullish control zone. Spent a lot of time in the bearish control zone, pardon me. A lot of time down here recently. Jimmy, I'm going to sign off and rewatch later. I'll see you later. Oh my goodness, Rich! So prices have pushed into the bearish control zone a lot. They're now pushing into this area, having put in lower lows. You can see that there's a touch of bullish divergence here. It may well be that at some stage it bounces to the top side and finds another oscillation somewhere around that 50 simple at 34. That's currently where it is. It'll of course move. It's dynamic. There's the low that you'd be looking at, 24.35. That's halfway to the target. You got a flash previously in at 21. You know, that's still an important area. There's the golden pocket. It's hard to see this doing anything at the minute. That's just awful on the MACD, and that's a rejection on the RSI as it's broken through its horizontal levels. I'd expect continuation here. You know, it might be a broadening, descending wedge. Might be something more like a channel. Doesn't look so far like it's going to be accumulation pattern, but we'll see. That would be two areas, and I'd in fact anticipate this thing breaking. Oops, pardon me. Back to the old trend-based fib extensions, eh? Where have they been recently? So you're at the 382 at the minute. You've gone through the 236. This could be an area for a bounce. I'd look at the basis line, the 200 period moving average here on the daily time frame as resistance. Gets above that, I'd be expecting this thing to be, you know, it would be back above the 236 of its own fib. At this stage, you could be expecting to test the previous high in at around 42. I don't anticipate that happening right now. It's got bearish momentum on it and a rejection signal. You've gone through the 236. You're at the 382, maybe a small bounce. If you don't break those levels, then you'd be in at around 50% retracement at 27, 27, 27, 63, somewhere around there. Be the first target if you break out of this. At that stage, I'd be looking for this to potentially bounce, maybe find resistance at the downward sloping level on this channel. If it's very bullish and the picture's overall bullish, then we'll be pushing to the top side or the basis line, come back up, test that 236 again. At the minute, I'm not seeing that, right? And I'm not seeing that at the minute. I'm thinking golden pocket retracement 23, and then ultimately this thing coming back even lower and testing the 236. This is at least going to come to support. It's been doing that in this many levels, and it's been bearish on the RSI. It's been bearish everywhere else. It's bearish. Volatility is picking up. That's dodgy. It's really dodgy. 4 hour. You've got a flash at 35.4. Currently, you're at 30.99. That's somewhere to target. Is this the place to enter? Well, with regards to this formation, potentially it's a lot lower risk than it was when it just got knocked out the 50 simple. You're in the bearish control zone and you've not managed to pull out of it in a 4 hour yet. You've got volatility. It's like could go up and down and put in a lower high and be perfectly in line with this formation, this broadening formation potential, and it would be very, very bearish, right? This is very bearish if it puts in a right angle broadening formation like that and finds horizontal resistance at this same horizontal level over and over and over, and is constantly putting in lower lows to the downside. That's very, very bearish, and it's a distribution. So like one of the most effective distribution formations to be trading, and then you'd be definitely targeting this thing at its own golden pocket from the previous fib, and that would even a bit further, maybe down to the 236. This is what I'm thinking this thing's going to do long term. You could hit that 35.4 in advance of a breakdown, or it could be afterwards. The target you aim to 2 hour time frame, you can see it's in this channel. It's met this downward sloping supply. The 50 simples crossed below the 200. Price action hasn't completely tested it, but I'd say it went through it as there was failing, so that counts. And you don't necessarily need to go higher. You can see that push up higher at this stage was a bear flag, and likely that would lead to a measured move 37. 31, $6 off 31. That'll take you down to the 26.94 level, and it could break any moment. Down to the 1 hour. I mean, you've had your sell signal there, eh? There's the 30 minutes. Expect continuation of that. There you're getting the confirmation signals across the board now, and volatility is picked up. It's probably in a minute of happening right now. It's either breaking down or bouncing up to the top side in order to break down right now. So there's something on. In the bearish control zone. Doesn't look very, very good, does it? Crossing through the center line, the MACD, you've had your sell signal, you're below the 200 period moving average, you've got your confirmation on the RSI, you've also got continuation divergence between these two highs. You'd expect this to push down again then, back up to the time frames and hourly, and look for the first level of horizontal support. On the hourly, it's so far away. Going back in time, it's in at around 29.81, and today's low is 30.99, which is at the minute, down 5.35%. It's got a little bit further to go. That's enough of a percentage drop to say that perhaps this is the first place that it could try and turn around. If it doesn't go there, then you're looking down at 28 and change, and I would say that would have breaking the long-term trend. I'd be looking for it to push further and talk about those other targets. So that's what I'm thinking with Gorilla Glass. I like it. I like what they do there. I like it. Great invention. Big fan. Big fan. Auto glass replace. Auto glass repair. They're even better. Have you seen them? Auto glass. Auto glass, eh? Auto glass. 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 Hacksaw. $5. Why? Okay. Right, so brutal price action on the last wee while on the old why. Here we are, it 5.99 down 9.38% at the moment. That's pretty bad. We talked about this potential area for price action. It'd be important to get when it got there. It got there, and what happened? When did we last look at this? I should leave marks on the chart. Well, I obviously would have been before this channel ended. This was the top side of it. You were hitting a 50 simple period moving average. That was after price action having broken to the top side, put in a lower high. Continuation of this channel, having broken out the bottom side, you test the top side. When you recovered it, you went back above the 50 simple, didn't even get to the 200, and then started falling back down. This is a rejection, 1, 2, 3 of them. And most recently, that's when price action has managed to push back towards what would have been the basis line of this channel. Push back towards it. Rejection with a 50 simple. That previously was a rejection at its most recent high. Subsequent next rejection, the cross of the stochastics as you're below the 200 period moving average up on the 1 hour time frame pushed you back out of this channel. This was an important level. Find this. You wanted to then get back above 869. That was the resistance you found in this oscillation, and then you got knocked back below it, as you would expect. So if you did make it back above there, you're looking for the 236, and that's very important to get above there. That whole zone's 236 and the golden pocket. These things don't all match up completely though, and we've now got these new little, that would have been price action at this stage we were talking about in around here. Oh yeah, and it got rejected at the top side of this liquidity zone, so downside expected. So far we've made it down to this low, 236. Then does this come in with our golden pocket? No, some distance. Still same important levels with regard to trying to break above here. Maybe you take this guy down to your 236, and then you'll try to recover back above this 236 now, so we could tighten that range. Obviously to get there you'll need to be back 1618 extension previously. Okay, so that's okay. You've pushed below it now, you probably look to the 2618, that comes in at around 56. Is this even right? It isn't completely accurate. 1618 extension is a bit lower. Anyway, so you'd be probably looking for this thing to push back down to $5 if it doesn't start doing something positive soon. No bullish divergence here in the early. Let's go back up to the weekly and give a better picture of what's going on here. Hope this is what you're looking for, right? Well, I mean, probably what you're looking for, Hacksaw, probably what you're looking for is, well, I mean, that's quite a nice message. Maybe you're understanding what I'm doing here. So, a lot of people just want to you know, like there's a lot of people watch the show, right? And if I say something positive, perhaps they'll take a trade. And some of the people who do this and it means nothing to them, chuck 200,000 grand at something, it would mean nothing to them. A lot of people who watch this show have got that sort of, right? And so me putting a ticker on the chart at all, I have to be a little bit like, I have to be responsible, right? I have to be responsible because my life means something, right? I mean, my life means something. These people with the hundreds of thousands that might chuck it and not care less, right? Now, I'm not trying to be facetious here or trivialize, like, that might, now, 10 grand might not be anything to them, or 2 grand, or I mean, that's stupid even. I'm projecting here saying that's not possible. Like, so anyway, people, right, maybe people will take decisions based on the things I'm looking at. So I have to be responsible when I bring anything up on the chart. And then, but a lot of people will just want me to look at something just so that I've looked at it and other people see what I think of it, because they've already made their mind up and whatever, and they just want other people to be interested in this thing. And that's one reason why other people want to know, like, what direction is price going at the minute, like where's it going at the minute. And then people might ask, like, was it Gabe was asking earlier, or was it, who was it, might be asking, well, what's going to happen on by tomorrow's close or whatever it is, you know, and I don't know, right? Answer is I don't know, so I do give my best guess or whatever to help out. But then also other people want what I just did on GLW, like they want the whole thing from the weekly down, and they want to know what do I really feel about this stock and where's it going to go long term and what's it going to do in the immediate, and like how are we going to know if those things are happening, etc., etc. And you know, that's great content and people really do like it, but then it doesn't necessarily work for the YouTube stats, so I don't know how to do it all perfectly and whatnot. And you donated $5, which is appreciated, thank you very much. Obviously you did then go on to say how it's priceless. Watching the streams is priceless, which is true, is priceless. So there's that to be aware of, right? Thank you very much, it's appreciated for the donation. And yes, we're looking at BBBY and priceless. It's priceless, so it is. So this thing currently is at $6.03, and I was just drawing on thinking it'll go at 5. This previous low in here is at 321. That's interesting. I mean, have we talked about this before? I can't remember if we've talked about this before. Have we talked about this before? That's cross there. You're significantly below the 200 period moving average. Definitely wouldn't define this as positive, but you know, it could be a lot worse. It could be just crossing at the top side and price could already be here. Anywho, right, not that it really could, but that's not the way. It would be very, very difficult. Anywho, what was I saying? Yeah, this looks like So there's a number of things here, right? There's perhaps a harmonic, right? We're not going to go and test it all out now, but there's an ABCD breakdown. And like in all honesty, you might, you'd be like, it's bad news, eh? Because it says like, I don't know how to say it. It's not great. It's not great. So price action previous lows there in at around. This is the price it is at the minute, though, is it? No, is it not? Yeah, this is the price it is at the minute. Yeah, it was only going to come in around these levels. Hey, Tradespotting, this is not so bad. This is not so bad. Price action's already made it here. So there's your ABCD breakdown. And once you failed at that C point here, price action was likely to break down. Should it be bought into now and carried to the top side, which would be completely against the overall trend, and it would be like unusual to see it. But the 50 simple, if I turn off the smorroings here on this weekly time frame, is approaching the 200. It's not being tested. And it could be tested. In fact, it's maybe even likely that it will be. It's just not necessarily at that horizontal level where it's crossing exactly, and we can't tell right now. But, at some stage it likely would be. And if you were trading this thing, A, B, C, D, it's a breakdown pattern. So you're looking for prices when they hit this C to potentially start giving you some signal, and then maybe you're taking it to the D, or maybe it's informing a trade you've already got. You don't necessarily take this D and try and trade it up. So if you do, a lot of people would say that their maximum take profit target would be the C, and that actually we'd be looking for a golden pocket retracement. A golden pocket retracement from that C at the minute comes in at 200 period moving average here at $15. So it would be like, that would be where a lot of people would be like saying, not necessarily even trading it back up there, right? That's probably not, but everyone who understands that concept, generally speaking, would be inclined to look for that to be in the next place to short it, because they're looking for continuation if they're a trader. Volatility has been crazy on this thing recently. These highs, like that's a lower high. You were bearishly divergent at the time. Ace, yo, how's it going? I could do that, but I'm afraid I might. Okay, I did it too. That was pretty good. Just the CPD, investment advice. Don't forget the widows and orphans. Yes, don't forget the widows and orphans. Ace, thanks, Ace. That's appreciated. Don't forget the widows and orphans. Yes, don't forget the widows and orphans. That's investment advice. Trading advice, I would say trading advice is, yo, Grape. Stop it, Gabe. As trading advice, right? The strong do what they can. The weak suffer what they must. But it's great, right? Because you can decide which you are. You can decide which you are. Thank you very much, Gabe. This is so the show is sponsored by Gabe and Ace and Mr. and Mrs. Anonymous and Axel. No, what was the question? We were looking at this thing. BBBY. What do I think? Right? There's potentially a harmonic here, in which case this D point might be an entry. I'm not going to embarrass myself by starting to look through it now and getting it all wrong. You can see this low here, desperate times. That was like incredible squeeze back then. That was the March the 9th, 2020. COVID lows. Price action's not yet back to those areas. That was market shock type things. You don't necessarily expect it to get back there because of that, that event itself or whatever. But this does define a very important level of support. No, you are the best. What is you are a Gemini? What is you are a Gemini? Who's that? It's okay. I never had a great eyelashes to begin with, but I'm sure your head will grow back eventually. It's what you think. You think that, but I wouldn't guarantee it. Heads don't have a habit of doing so. Bleh. Ow, reading chat there. Selling QQQ 275, 630 around 2 p.m. EST. Why? Because these guys are smart. 6th of the 30th of the 6th, or the 6th of the, it must be the 30th of the 6th, right? The 6th of the 30th. That sounds unusual. Right, so at around 2 p.m. on the 6th, because I'm smart. But sure, I only talked about the 17th so far, didn't I? But anywho, yeah, interesting, right? We'll see how that goes. That's interesting. No, you're the best, thanks. You're the best. Gabe, it's the BBBY 1 2023 market for, wait a minute, 40 cents. We're looking at RC bot. Can I beat puts 2 leaps? Puts 2 leaps. Can I beat puts 2 leaps? Puts 2 leaps. How you doing, puts 2 leaps? How you doing that? Goes for $30 bucks. There's Ken with his little banana. Oh, I love Ken and his wee banana. How did I miss that? I didn't miss that. I don't understand how I'm missing things. So, thank you very much there, Gabe and Ace and Luke. What was I saying? You can't say Luke without not thinking Star Wars 8. You just can't. So, what did I miss? This was thanks, Luke. Gabe, thanks, Gabe, and Ace, thanks, Ace. It was BBY. We're on BBY. It's right in front of me. There's a breakdown there. There's a potential harmonic. You wouldn't necessarily anticipate going any further than that. So let's look and see what the momentum says. And bearish control zone, push back up topside weekly. That's okay, but it's a trend already in motion. It's a break, and you look for continuation, in which case you're kind of worried about 316. And the question was explaining something about it was what we're looking to beat. Where was that? Gate was saying it. It's the BBY first. Oh, it's 2023. You're starting next year. 40 cents. Calls. RC bought 40 cents. Calls. Puts 2 leaps. Puts 2 leaps. So, I mean, are you saying that you've got puts and that you're going to swap to long-term equity position after you close it? Excellent show. If you have time, KCS, yes, definitely. I have time, but Bulldog, thanks. I don't understand what that means. If you're looking for it to get back to 40 cents, like I don't know if you want to be targeting that from here. Who was that? Ace as well. Ace, thanks, Ace. Bulldog, thanks, Bulldog. KCS USTT. You betcha. What did you say about 40 cents? Sips tea, bloody hell. Tartooting, me too. I wish I had some tea. Know your farms are my farms. Teaching is the best. Don't thank me, thank your TA. I'm tipping on my QQQ dips. You're very good to me. Thank you very much, Keep. Closing my QQQ puts and throwing my BBY calls. Throwing them. Closing them, throwing these. Right, throwing them. What's happening? I wish we were able to explain I wish I was communicating better. Jamie doing extra time. Is that what this is? I don't know what I'm doing right now. I'm really getting everything mixed up. Right. So I wish today could have been a better show. Right. What are we looking at here? I hope it is a good show. Right. BBY, $6. I don't know. I never know. Right. Right, this thing came back to the D point. It's a potential entry. I don't know, though. I would actually myself look for this to come back. I could just test these previous lows, right? It's also it's like, I mean, 50% off price action, right? You've lost 10% today, but then you needed to get in around these levels. Is this the target, right? Why have I got that box on anyway? It's 236 and the 1618. This was it because we were in a downward sloping channel. Yes, a downward sloping channel. And speculating about if you did break to the top side, what would that mean for price action? Would it break a 236? That was probably what we were doing. That's what I would be doing if I was back there now. And we opened outside this bottom, we closed outside the bottom of it, pushed to the bottom on the weekly. Okay, interesting. 3-day, getting a picture. This is crap here. It's super crap there. And that's terrible. And all the money's leaving. Oh, geez, right in perfect formation. And volatility's increased rather than increasing, right? It's not got anywhere else to go now. It's high, as high as it gets compared to its previous behavior. When it's redlining the volume, right? It's a percentile look back, and this percentile is like more volatile than every previous percentile. It's a look back period of 30, so you're looking at like on a 3-day time frame. That's 100 days. So every candle is basically 1 day, 1%. And at the minute it's saying that every candle that's red means that it's like a larger degree of volatility than every previous. Not every candle's 3 days, but every day, right? It's constantly getting more volatile. That's what I'm trying to say. Got to lend a hand to us plebes until the point where it's at here, right? Now it's red lining. Doesn't mean it can't get more volatile. Doesn't mean that, obviously. It's not like it doesn't control anything. It's an expression of what's going on. And when it's red, it's like more volatile than any of the previous periods, right? This is the most volatile percentile, right? And it's red. And when those things drop, then you can look at a signature on the chart and you can see this is what we talk about with GME, right? It did this sort of thing in and around, like more recently. It's doing this and volatility go crazy. So that's different signatures, a different time. Anonymous, and $3. Call to put ratio 33-1 on BBY. Reminds me of a company I know and love. I see the call to put ratio you're talking about. Yes, call to put ratio 30-1. So interesting, right? Interesting. Of course, there's more to it than that. The call to put ratio isn't the be all and end all, but that is very interesting that the open interest would be set up that way. you know? It's very unusual for companies to like put in lower lows when they've got such positive open interest. But then the market circumstances that are at the minute, there would be a lot of general enthusiasm you might see from that sort of information is a little bit dampened because of the market conditions and whatnot. That's good information, you know, 33-1 call open interest with regards to the option contracts. And that, it depends, you know, obviously, like that doesn't speak to like the volume of trades contained, like the volume of shares contained within the trades or whatever. It does talk about the overall open interest. I suppose that like there is interesting information in that. You know, it's very difficult to use that information to judge exactly when things are going to happen because, of course, right, it's gone down. Like I imagine that ratio hasn't changed all that much since it was at $51, and perhaps not all that much since it was in around $3. So the price is written on a glory hole. That's what's it written in? Biro sounds sore. I don't know. Shoot. You say that, but you seem to have good opinions of whether or not, you know, that's nice, like to have a good opinion and to be well thought out, and then also, you know, not to be holding on to it like it's part of your identity and means, you know, whether or not you get into heaven or not. Just to have the opinion, so this demonstrates critical thinking, and then you're responsive and flexible and adaptable in the face of price action. The best traders and people who are successful at anything will find themselves to be adaptable for most situations, even if you are highly talented in one particular discipline. You are captaining your ship magnificently, Tradespotting. Just keep on full steam ahead and we'll enjoy our most excellent journey. Yeah. Wow. Yeah. Thanks. Did we get enough of those in? I don't think we did. Right, I maybe not been paying attention to the attach because it must have been asked for. 1992 interest rates were 6.5%. We aren't close. Yes, true. The interest rate 6.4. Where are they going to stop? You know, I've seen people say 7%. That's what the Fed are going to stop at, 7. And they seem quite. I mean, not seen. I've had conversations, and anyway, I don't necessarily say it's all much. They don't know at the minute. I mean, Jerome's got no freaking idea, eh? You know what I mean? Like everything he does is based on how we react. Man, I'm only as good as the information I get from you guys. It's been very nice. Stupid creepers, right? So this people will be what? Down 10% on the day. It's in there around the buy area. If it breaks these zones, you'd be looking for it to push down a little bit further. Did we get anything here? I don't know, right? Daily time frame. We started on the weekly or something. What am I talking about with this thing? That's a brutal move. Looking left, you broke that support level. What did we talk about with regards to... Right, let's just get rid of some of this stuff. It's made its point anyway. That was all previous. Wow, there was a lot of these fibs. Gosh darn it. Right, and that was tick, right? That was a tick. Moved. Great, we don't need you anymore either. And these liquidity zones, right, they'll probably show up again. So, I mean, at this stage, you'd be looking from the previous low to the high and seeing how far it's not got to the 886. That would come in at around 463. And just going to borrow this line for that. This line for that. That's the previous low. That's that. This one. You get dingied me. Actually, I'll put you, that's the price at the minute, so I can't move that, unfortunately. If I could, I'd move it right up there for you. There's the top of that move. There's your 236 on the way. That's a bit irrelevant at the minute. Ace. Yo, you're a member. All right, a member. Members, eh? Members get all right. Members get all the best shit. There's a link in the description. Moonman, $5. Hey, Jamie. Yo, buddy. How are we bouncing off the bottom? Jamie information. What is our upside target? 141? 141 at top side? That's in around there. 150. It'd be like extreme top side, but we'll definitely take a look at it. Are we bouncing off the bottom? Good question. We'll come back to GME to finish up when we've done everything else. In the UK, the 80s base interest rate, LIBOR, went to 18%. Yes, that's JCC CPD in there who had mortgages and was experiencing that cost of living, right? It was that very incendiary term which makes me want to walk down the street and blow up the Houses of Parliament. That term, the cost of living, you know, that was him when he was doing that with 3 kids, moving countries, getting new jobs, putting up with interest, 18% base rate on your interest. Shocking. Shocking. There it is. Coco is with Papa. Yes, yes, there it is. And his name is the GCCBBD. Welcome, Ace Ventura. Welcome. And there's another flying pair. Another flying pair. I missed messages here. Here, this is like the good old days. This is like the good old days. Ace, yo. Moonman, yo. How's it going? That was the question. I have to answer. The ones I have to answer, I'm going to try and put to the side. And if I pull them off in advance, then I don't need to tear them apart from each other. And they don't look so messy. What have I missed? I'm doing BBY. Right, I've got to keep doing that one. Looked at GLW. What have I not done? Banana. And then GME. Well, that was a good question. There was my entry below 100. No, maybe not. Let's see. So that's a similar question to asked there by Moonman. So Moonman and BBY, which will finish now. And thanks very much, Ace. Ace and Gape and Luke, thank you very much. Luke asked about Spy earlier, and Bulldogs asked about KCS. Right, so this is good. Thank goodness I didn't know. Right, these ones I've done. These ones I've yet to do. BBBY, right. 886, that's what I'll be looking to. $4 something and change. As you get there, and I'll be measuring the momentum at the time. If it's in the oversold, you probably get a bounce. So that'd be interesting, especially if it's 30 to 1 and whatnot. Explosive moves to the top side. And when this does move up, if it's 30 to 1, right, we're super interested to see how that plays out. There are daily time frame. You're not getting much on the volatility here, nor is that any sort of a signature. I don't need that information at the minute. This has been very much, you can see there is representative of what that point about the 30. Is it 33 to 1, you said, right, or something incredible. Right, you can see that that's a lot of that there, right? Any of the money that came into this thing, generally speaking, was buying it long. Tradespotting, I survived, did you know? Yes. Thanks. Thank goodness. Thank goodness. I was born in the 1980s, so I'm a double-digit percentage baby, innit? So that's what we all are. This is why it's volatile. It's a volatile market. Well, it's because we're all born into this wrenching, tearing, screaming situation. Bulldog. Right, so no, we haven't finished this. Yeah, so I'll be looking at retracements down and I'd be thinking of explosive moves to the upside, but that's not the TA. We did it a little bit. Weekly time frame, we could say, this is the breakdown from our high here. And you're looking at the 886, right? Yeah, I see that. Lower low previously. This is a higher low, but you've got pushed lower on the momentum there. Right, that suggests that price action might come on. Mind you, if this is pushing to the top side, then that would be continuation, like hidden divergence and continuation to the top side. It's just overall on this time frame, you can't define this as in a bullish trend, right? Because it's putting a lower low here, and this is a lower high. So really, even if this was now a higher low, it wouldn't be part of an overall uptrend, and you wouldn't be able to define that as continuation divergence. You've got a rejection on the MACD, which looks bad. The weekly, you've pushed below. Stochastics are way down here. You could just see that peter to the side, and you'd expect it to come to 450, if not push all the way back down and around this 1.13, or even like this previous low here at $2. And, even if it is open interest, 33 to 1, one side or the other, it's all about people buying the underlying that actually drives the prices. Sure, options contracts can drive, and open interest will drive much of the mechanics and behavior of market makers and whatnot. But, ultimately it's the underlying that drives the price, even if it is their interactions with your trades that leads them to acquiring the underlying, which ultimately drives the price up and makes your options contracts and that strategy you've got successful. It is ultimately all about underbuying the underlying for somebody at some start of the stage of the process. What a brilliant community Tradespotting and Rocky Aircraft have built from scratch. Well, I can't really claim to be part of the scratch thing. I was a year into Rocky's hard work where he had to do it up from people doing live shows and no one watching, knowing that they were live and just trying to get into the habit and that, and eventually a few people turning up, and those people that stick with him from the beginning, they're the people that really make it possible for me to have had this environment to work in and these people to speak to and make it for us all to be together. So thanks for everybody, especially those the OGs who stuck with us, and everybody who will be like that if they're still here in the future. Would be interested to hear you, Rocky, do a video collab with Wade. Yo, Houston legend, focusing directly on squeeze. Seems like a lot of misconceptions, and would be good to know where we actually stand in regards to the squeeze, wouldn't it? Right, it's very difficult to know where we actually stand. Long stream of the day, freaking right, isn't it? Long is the word. Right, did we do this? We did, right? We did. Tell me we did this. 4 hour. Right, yeah. Oh, that's interesting there too, actually. No, we did that. We did it. It was an XABCD pattern. We talk about this. It still looks like you're going to push lower. Me, $6 at the minute, £9.30, 9.3% down on day 2 hour. You've broken out of this channel. You've got a flash at 8.07. That's a significant percentage to the top side. On the 2-hour time frame, you've potentially got like bullish divergence between these two lows. Not obviously within this part of the trend. Maybe we've talked about this already. I feel like we did. This is potentially, you didn't have a higher high within the trend. That is the low. This is the next low. If it gets back above a 236, you'd be looking at this as, class B bullish divergence potentially at this stage. Your MACD, you've got a cross there. This is a 2-hour time frame, so we'll see what it says in the hourly, and if you've got slightly more exaggerated versions of it here, but you had a potential cross, and that's coming with a positive side on the histogram. You keep going up there. I could see that breaking it and not being divergent, making it back up to the 887, and this thing coming at least towards testing the top side of this downward sloping channel. Could happen after this bullish divergence on the 2-hour, but longer term time frames don't say that you're certainly not in a bullish trend on the longer term time frames yet. That's for sure. But on the 2 hours, you do having potential inflection points coming in. It depends on the overall market because it's in a downtrend, and if the overall market keeps dropping, this will probably do so too. 2-hour, there is areas to aim for, and they are significantly further right. But you've also had a cross on the stochastics. 2-hour, you're below the 200 period and in this negative formation, so that's hard to go with. And then that MACD, it was pushing to the upside, but I can see actually it's maybe crossed, and you've got a rejection from your previous upward sloping trend line on the RSI that's now forming resistance above and approaching the center line. If this was to be a channel itself pushing to the top side, then I'd look at this reaching the center line. At that point, it'd likely be continuation divergence, reach this 8807 and come back and put in a double bottom. So maybe you're looking at this thing, if it is bullish right now, coming up, testing these sort of levels, getting rejected, going for a double bottom, hoping for some sort of W. Is that going to happen in around these levels? Possibly, but I'd much prefer to be buying it in around here. Especially if I wanted to move to 8 and had it from 450, that'd be way better. And then that's the golden pocket, or it's not. I've made it that color. It should be purple. It's the 886. So at that stage, you'd be thinking perhaps you've got the full move, and I'd have to be checking as well, but it might well be that there's a harmonic in around here. Beyond that level, I'd be wondering about this potential PRZ. I'd say it looks like it's maybe, don't know if the retracement, the B point in here wouldn't be deep enough to give you like a deep retracement and a bullish reversal harmonic at this stage, I don't think. But there's other things on the go as well. So if this does push lower, I'd be looking for it in around that 886, which I'll now make this color so it stops confusing me when I come back. And then if not, then the previous low at 325. And there's extensions and what below, and we look at them when price action gets there. What's the momentum doing at the same time? What's the picture saying? But really, generally speaking, you're not getting the signals to buy it right now, but you are getting a hint that it might be positive. Early, you're getting any more details then. That MACD's already been undone. The stochastics say it's definitely not a buy right now, and you're getting rejected on the RSI. So they're saying no, 2 hours, your only positive hope. That's not fantastic there either, right? So you'll need multiple touches of divergence if you're hoping to break this trend, and you're not getting it right now. The momentum's against you in 30 minutes. Pretty brutal. That there's your price action losing, and the gap, losing the 50 simple and the gap. If you did push up in the meantime, I'd be looking at this lower gap to be filled. This previous support that it found, that's below the bottom side of this gap at 638, 639. If price action was back there, that would be like a closing place, defending the top side of the gap. It's also the start of this liquidity zone. I found it really difficult to break above it before. I expected it to be the same situation now. This is very ambitious. It actually looks like it's about to break down 15 minutes, 30 minutes, 1 hour, 4 hour daily, and then everything else up to the weekly kind of looks like it could test lower. It's only the 2 hour where you're getting sort of hints at stuff, and then the hourly where you can see an interesting gap. But overall, I'll be a little bit worried about BBY. And then quickly backing on it to Spy, yo. What are you up to? What are you doing there, Spy? Little Spidey. 367, spot 67, down 3% on the day. It's 11.48. You're looking at this 236, the previous at 365. The low of today, 365.76. Holy shit. That's pretty darn close. Holy sugars. Oh my goodness. That's really, really, really close. What's that line? What's that for? Go away. So they also had, this is also a breakdown pattern, the ABCD. You're in around that D now. This is the thing, it could bounce around any of these areas of SPY. I've talked about it a lot recently, that could make like little anemic moves to the top side, especially advanced like of a Friday, and everyone's like, oh, exciting. But like this is huge quad witching, lots of oscillations in the market. This as low as it is, are people coming in? It's liquidity going into SPY at the minute. It doesn't seem to be Potential cross in the MACD here on a 2 hour. Why am I on 2 hour all this freaking time? 4 hour, give me some long term. That's maybe crossing. You could see this push back up to 394.8. 50 simples in around there. That would be in around the golden pocket too. Is this Fibonacci right? It's not. This is the low here. Golden pocket at that stage. Yeah, golden pocket retracement. If you break this 376, you're in a downtrend. You're pushing down at the minute. Today's been even more of that. Break BBBY, great T8. Wait. Yeah, essentially wait. So with regards to this thing, SPY, if it doesn't push above 376, which I'm not anticipating it doing on the first pass, then you can't really be targeting 394. If you are trading options contracts and you're trading SPY and it breaks that, and it's like after Friday, right, next Monday onwards, it starts breaking this 236 and it has like 4 hour close, open, maybe then you're looking for a trade up to 394 depending on the momentum at the time. That would be like this thing pushing back above the center line here on a 4 hour. That'd be good to see. If that doesn't happen, you're still looking at this as a downward trend, potentially in a channel, and it could then like rest in the bearish control zone for ages as this thing knocks back down to 350. This would be the sort of target I'd be looking for. You're in at around 36576, right? So it's not all that far away from where I would be looking for it, right? I wouldn't want it going beyond that 382. I mean, this is completely accurate, if it is, then if that'd be in around where? Not completely accurate. Anyway, this is what I'd be looking for. Somewhere around here would be your entry, and then this is just for managing risk. You don't want to be holding this beyond 382, because if it does go down lower, it's down to 329, and you'd rather just like close that enter there. There's nothing in between. Look at the price action here, like literally nothing in between. And if it doesn't stop at 330, there's a 50% retracement and horizontal levels in around these things. I don't necessarily expect that to happen, right? 350, 340, like there's no horizontal here, right? Why would it stop at 340? It might, but it would have to be to the previous formation, like this target of what it'd have to be because of artifacts that it was currently putting in, as opposed to anything here historically looking left in advance of our most recent high. So you can measure it as it's going then, and that push to the downside, I don't think it's bottomed out just because it's bounced from 365. Not really. The lower time frames, hourly, what are we seeing? This turn off the drawings, that gap. Again, can't be another gap. That'd be 3 already. Oh my god, it is another gap. Right, this thing doesn't look like it's bounced or turned around yet at all. This is like trying to cross to the top side. It's above its own signal line, then it's failing before it reaches the center line. That's what you'd expect when you see the 50 go through the 200 and the price action below them both. You're getting that as price action's rejected from the center line, pushing back into the top side of the bearish control zone. That's brutal. Cross on the stochastics, that's an early time frame. You're below the 200 and that, I mean, it works, right? You can also see that money's leaving the market and it's been putting that after it's pushed beyond its previous lows. So it's not like this thing got into this area and generally speaking everyone thought that's a bargain, I'm going to buy it, and actually they were like, oh well, not going to enter in this anymore, take my money and leave. So like if you're looking for this to have bottomed out already, I'm not seeing it. 30-minute time frame, right? Tampoco, that's brutal. Yo, Ace, number one, quite possibly. Thanks Ace. So a little bit worried about that. No, I'm not worried about it. I don't care, but it looks like it might push a little bit lower in advance of that. Where would that push down to 350? Yeah, sure. Somebody asked about 350 on SPY, actually. You talk about 353 or whatever. Somebody say something like that. Why is that jumping out? Anyway, yeah, in at around 350. Pushes that, I wouldn't want to hold it. Risk reward on this trade. This is a suggested idea, like as opposed to taking this trade itself was all right, right? It was all right. It was good, in fact. Gabe, aha! Thanks, guys. Thanks very much. So I'm thinking about this thing, it's a better trade than back then in terms of risk reward, potentially, but then you have to be more patient with this thing and just be lows the levels for a long period of time. It's just if you're looking to close shorts, essentially, maybe that would be where you're doing it. You've been doing it already. It's coming up for Friday, like, it's crazy if you're holding this. If you want to put SPY put and it's closing tomorrow, when bloomin' heck, you really are a real hardcore crazy person. Right. Nobody really asked about SPY. Rolls-Royce were best quality car manufacturer in the world before they started in jet engines to dominate that market. The car business was sold to BMW. Yeah, but for marketing, and it works. Yeah, it does work. Best technical engineering firm in the world, and it right up there with NASA. Thanks. Rolls Royce, let's have a quick time. No, they're down again, right? We did talk about that. Anywho, right, not today we didn't, but here's a gap on SPY. It looks like, if you did push to the top side, you'd fill that and fill the top 50 period moving average on the 30-minute time frame where it reaches the 236 in at around 376 or somewhere, right? And, factor that into your own trades and expiries and whatever. Strike prices and whenever it is. But if you are looking for moves beyond that, you'd be a bit optimistic, wouldn't you? Especially because you've got no time left. And that speaks to both sides of the trade. You've got no time left, so you better make up your mind. And this is if you're short, you're probably in profit because, it's down again. 368.14. What does it look like on the 15 minutes? You had a low in at around 365. That might have been the area that we'd taken profit. If you did extend this trend line on a bit more, you can see it. Where does that come from anyway? Whatever. So, yeah, I'd expect this to push a little bit lower. If it gets to the top side on the RSI, I'd expect that to be a lower high projection from the center line while it did those things with that 236. Very simple in that gap. All those things. No theta left, innit, yo? You know what it's like, right? It's like, how do they work? They just get faster and faster and faster and faster and faster till Friday. Those theta, it's you spin them like that, the little stick, and then you drop the plate on top of it. Anyway, people don't know about the processors inside the theta machines. They don't understand. Anyway, talking about that, we're on to technical engineering. Royce, we're not actually. We're on to KCS USDT. Oh, we've done BBBY, thank goodness. And then we're going to go back to GME. So what was that last one? Royce, what's it doing? Right, retracement in around these levels. This is this 236, as you can see, of this the grand fib, right? This is the fib that they invite to openings. Openings, right? There's a new library in your part of town. This is the fib they're inviting to cut the ribbon. And he does it. It's like, hard job. Somebody's got to do it. Let's go on to the 4-hour time frame. There's that. Oh my goodness. Right, your 236, your 50 simples approaching that 236 here in the 4-hour, and that's where price is at 109, 110. That's the natural retracement. And here's the front door. Great to see you, sir. Hello. And the 2-3. What time? Shit, I've got. It's freaking F4. I forgot I had an appointment. Right, so, yo. No. For the lunch. You're here, though. You're here. It's great. Yo. Right. Brew was asking about 350. 350 on Royce, or are you talking about 350 potentially on why? Is that what you're talking about? This nobody really asked about. 236, you hope to find support here and then push back up towards the top side and break this obviously downward sloping trend, and then try, sooner or later come and meet this golden pocket you've already made once, and you've met the 200 period moving average, and that's so very obvious at that stage that there's two things you're trying to break. Yes, JCCPD, come on, Tradespotting, you can skip KCS, go have lunch. No, I'll just quickly finish off what we're saying here. No one asked for Royce anyway, right? So, if it did bounce here, that would be totally understandable. It's currently in an inflection point. It's come down the center line, RSI, MACD's coming at the center line, stochastics at the center line. This is it. Wow, everything's perfectly balanced. This thing might never change price. It's a complete equilibrium right now. Every oscillator is in agreement and happy. Everything's fine. And you could imagine that this is the perfect price for this thing. Huge agreement with regards to price, which actually leads to huge moves as soon as they change their mind. And it could well be that this downward slope information breaks to the top side. You can see so far that it looks like potential. This may be a wedge sort of thing here, depending on how you were draw it in. Right? Obviously, there's different ways. Obviously, there's anywho, right, and where you start from and your anchor points and whatever. Anyway, there's about 3 different strings showed up there until this downward slope and broadening wedge. If price action does push to the top side and break this downward slope and resistance that comes in at the minute around 120, then it could push up to around 141, try the 886. Do I expect that to happen right now? Well, there's a bearish cipher on the chart, so that D point, that speaks to a retracement to the golden pocket and then pushes trying lower. So you really want to be holding some sort of important support level within this oscillation. That would be the first one to look to is 236, and you're there at the minute. So you want it to bounce from here, like you want it to. And then KCS for Bulldog. Yo, KuCoin token. Okay, cool. Right, interesting. Right, this is an interesting one. Exchange tokens. A lot of volatility in these. Extremely explosive moves to the top side when things are working out. News-based events really take cutting the bottom out of them, sometimes offering huge opportunities. So interesting, right? They'll also have similar, not that I understand it or have looked into it myself to be 100% honest with you, but I expect they'll have, because they do everything else Binance does. I mean, they just try to copy all the good ideas Binance have. I imagine there's a healthy burn on that token, and probably, you know, in the bull markets you'll see huge moves the same way when, you know, even when you see like the altcoins aren't doing all that well, but like Bitcoin's like charging to the top side and dominance is crushing, you're like, damn it, I wish I just bought Bitcoin or whatever, right? Or I wish I'd bought alts, and it's the opposite way, right? Whatever. It's true to say that the exchange coins generally speaking do well when the markets are doing well, and they might outperform altcoins if Bitcoin's doing better, and vice versa. So it's a good place to look, right, for a different risk profile. This is putting in lower highs and lower lows. Currently it's in a downtrend. That's on the 4-hour. Go to the weekly time frame. That's a higher high. Not bad. Not bad. Obviously this is like not being around as a lot of other, as long as so many other assets. So this is the low, this is the high. So far you've made it to the 236 from its all-time high, and it's all from low. You've only made it to 236. That's super positive, like that it's only come down this low. Mind you, it's only started, its existence only began in 2018. Then you would also perhaps look at this here. I don't think this is at all relevant, you know, but perhaps if price action was to push to these levels, you'd get a bounce. In advance of that, you'd be meeting the 200 period moving average. The 382 comes in around at 3.58. It's currently 11.346. If it doesn't hold the 236, which is at around 8.57, so, you know, a good chunk of percent. Yo, Curran Roberts, I ghosted me for 10 months. Love you all, still battling with life. With ya, life breaks are necessary. Still here, a silent ghost lately. Solo dad life. Miss y'all. Yo, Robert, Sir Robertson. Sir Robertson, Mr. Currenson. Hi, ghost indeed. Great to see you, Mr. Curran Robertson, McCurrenson. Thanks for dropping in. Lovely message. 10 months, eh? Yeah, can he beat it? Well, you know, you could with more months. But it's great to see you. Lovely headband there. Purple hearts. Look, I got Riven 3 purple hearts. Who can say that? Few people alive. Right, so there's the 236. Yeah, most of them, you know, most of them posthumously anyway. Right, 38.73. So a third of price action potentially. You've got 4.2% down on the day. Whoa. Right, it's Thursday Tradespotting. You can't carry it away yet just because you see 420 somewhere. Right, so there's total 200 period moving average, and there's the golden pocket. The 236, and you've come close to it once, but I'd expect you to test it again. Downtrend. If you do break it, the 200 period is your next stop. If that doesn't hold, upward sloping demand line there, but I'm not anticipating that being relevant, really, to be honest with you. 2-day time frame. You've got that flash there. Price action did well to go through it, and then went onto the top side. It wasn't like it was resistance. You then put in a higher high. Good to see. Back down, you lost this support level pronto, and that came in to be the previous high then, and then subsequently the previous low. So this thing's rolling over at the minute, and it's also expressed by the fact that the price has lost the 50 simple, then lost the 200, and then found rejection at it. When it tried again, pushing back down again, you can see that you're in the bearish control zone. Don't have any bullish divergence throughout this trend or at this period in time. You do have bearish divergence at the top side. You'd at least expect it to come around to the 236 here, looking at the 2-day daily time frame. You know, potential cross to the top side. Yo, thanks, Ace. Piggy, little big pair. Wow. Thanks so much. You know, pairs, right? I worry because he's flying like that. Is that his mouth open? It is. He's going to get awful dehydrated traveling at that speed with his mouth open. Thanks so much, Ace. That's appreciated. Oh my goodness, I missed one before, and guess who it's from? Gabe Sherman, Ace Ventura. Thank you very much, guys. $220 and then a $10 from Ace. Oh my God, what a day it is today. This is incredible. This is incredible. This is an incredible day. This is a brilliant day. Oh my goodness. And me starting off being such a big yap earlier too. Thanks. Whoa, I just put away things I hadn't done. It's this one. This is the last one. Cheapers Creepers. That was close. Great to see you, Curran Roberts. Hope you're doing well. Thank you very much, Ace. What about the parent? Is he dehydrated? I wonder about him. Is he dehydrated when you fly like that? You know, close your mouth, that pair, and then you'd reduce drag, and then you'd increase fuel efficiency. And right, it's all about saving the planet nowadays. Love you, buds. Yo. Love you all. Ace Ventura, look at that. Lovely smiley faces. Right, okay, great. So thanks for that, Ace. And poor pair. Hope he's all right. For case they could do with a parrot, right? So, you know, grow a parrot, whatever, right? Loads of those things. I could make jokes for my whole life, couldn't I? Well, then where would that get us? This thing currently, you know, you'd be anticipating continuation so far. Resistance at the 50 simple on the daily time frame is at 15.64. That's a huge price up where you're going at the minute. You're not getting anything information that's useful or realistic here. You're below this basis line of this potential channel. You've had a cross on moving average on the 4-hour time frame, and possibly, you know, getting a signal there that this isn't particularly positive. The RSI is in the bearish control zone on these time frames. You've got crossing the MACD, but it looks like it's about to be undone. You don't have bearish divergence in advance of that on a histogram or this signal and MACD lines. The average true range at this stage, you know, what are you getting? Not very much information here. The value of it at 0.48, right? That would take you below 11. Not back to your previous low. Within this here, you're thinking, is this an inverted head and shoulders? It could potentially be. If it breaks back above this basis line, I'd look for it to make a move up to the 200 period moving average and test that sort of downward sloping trend line there. You see it put in before the break. You know, these sort of levels probably gets caught on the 50 simple with this previous resistance support level being resistance now, and that's lower than that area. So, you know, if it did get the inverted head and shoulders, push up towards 14, 15 bucks, that's a huge percentage move on price action. You know, and if things are positive across the market, that's where it'll go. If things break down, it'll come back to this previous low at 9.7. Holy shit, 50 bucks. You're amazing. Oh my goodness, Gabe. Oh my goodness. Oh my goodness gracious me. This is bloody X. Right, so, you know, you're going to be here tomorrow, Gabe. Anyway, thanks. Appreciate you guys. These are brilliant. This is credible. Right, I don't know what to say anymore. What did we get in that poll earlier? Not really poll. What do you make of average reach? Yes, no. Good one. Did I end it? I should have. Right, so, you know, that's that. I hope when I was speaking about that earlier, I also came across and made my points clearly. I don't mean to say, you know, and I didn't say that I don't appreciate or agree with the way he's saying and doing things. I think they're all fine. I think they are. It's just like the people interact with it, and anyway, you want to be safe. You know, you want you to all trade safe, right? I don't care what people think of me. As long as more people are doing better than not, then that's the best thing. And the people that aren't doing good, as long as it's not as bad as it would have been, hopefully better and better over time. Right, so downward sloping resistance, likely to push there if you go to the top side. Depends overall market. 2-hour time frame, what's this telling us? You're below the 50 simple. You've been below it since you had the cross here. And you've been pushed into these low areas. You've got bullish divergence. There's an inverted head and shoulder potentially. If the overall market moves to the top side, this thing is going to go up to 15 bucks. That'd be a big move. Not seen it yet. Stochastics turnaround here would be unusual, especially in the current downtrend. And then the MACD, wow, I managed to squish you down, didn't I? Have you ever had a cheeseburger MACD? There's 1, 2, 3 crosses. So I've just about failed and it still keeps going. Histogram says nothing wrong with that, and you're not looking at this. Like you see, you've got continuation divergence that suggests the price is going to move to the downside on the top of the RSI, and then underneath you've got classic bullish divergence that says price actually going to move to the above on the RSI, right? So you've got these two conflicting signals that are going on at the same time. So you see that divergence is only going to push you between support and resistance, and currently that's defined as this little flag that you're in, and we saw it on these other time frames when we drew a big channel. Oh look, there's a flash up there, exactly where the TA said we're going. Holy goodness gracious molly. And then maybe you're looking at this and saying, well, in advance of that, we're in this downward sloping channel here. Channel trades bonus. This is a channel. You know, you've held the basis line now. You managed to break back above the moving averages in this downward sloping resistance. Then you will try up here to around 1374. Perhaps you go around 13.1 around first. That's a big move, right? Percentage wise, it's a huge move. Considering it's gone 420 against us, that's crazy. I reverse NASDAQ. Nice work. Nice work, man. Let's see. What did you do to it? Oh my goodness, you reversed it that way. Oh my goodness. Sir Gape, what were you doing that for? Oh, you were this way. We'll talk about the 1 minute. It's just a reversal. Here, a little pull. More power to you, sir, because you're going to need it if you want a complete reversal. This gap's brutal. It's a huge gap, the size of it compared to the range of price action and whatnot. I mean, that's brutal. 15 minutes there looks that's brutal. 2, that came up and got up close to, but didn't fill that gap, did it? Ooh, ow, 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 ow. 1, 2, 3 gaps. Filled that one. So 3, and that's on the 15 minutes. In the early time frame, 1, 2, and then there's a flash at 12.565. Not aiming for that from here, folks. But yeah, interesting, right? And then further downside on ARC, having got to that 50 simple and pushed lower again. This is well annoying, right? That was well annoying for me. It cost me a little bit of money, this thing. Just because I was on my own stupid and not paying attention to the full chart when I was making it, because I had a show coming up and I was putting in order. I was being silly anyway. It cost me a tiny little bit on my entry. I could have entered at a better place. Puts paying. They certainly would be if things are dropping on that. Nasdaq looks brutal. SPY down again. 36699. Right, yeah, and that's that downward sloping trend line. You're back testing that at the minute. Continuation expected. So did we get through KCS? We did a little bit. I don't know if I got to the 15-minute time frames, but it obviously depends on the greater market at those stage, unless you see some really crazy inflection point. And it might be happening, might not. But thanks so much, everybody. Thanks so much. This is the best show I've done in so long. This is so very, very positive and encouraging. Thanks so much. Thank everybody. Thanks, Mr. and Mrs. Anonymous. Thank you, Ace. Ace, yo. Mr. and Mrs. Anonymous. Gape, thank you so much. Mr. Sir Milord Luke Spears, thank you so much. Thank you so much. Hacksaw, cheers, buddy. And Bulldog, thank you so much. And Moonman, thank you so much. And asking for a friend. And I think that is each in there. Acid was taken as well in AV80 last night, who I might have missed this down. So we got them all. We got them all. Wow. Look at those. That's some quality. Nice. It's over 2.5 hours I have to rewatch. Oh my goodness, is it that long? Flipping out. G-Ape Sherman Tank. Yo, G-Ape. 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 I get it. G-Ape. Get it. Yo, G, Mr. Sherman. That's the tank, Sherman. G8 tank, Sherman. I get it now. Oh, it's all coming together. The highest quality. Thanks very much, everybody. It's appreciated. Rocky's show you'll be redirected to at the end of this. And I hope to see you there in the chat box. It'll be exciting later on. Talk about all these big moves in the market and everything that's been going on. Bitcoin flirting with the idea of getting back up here at 22 plus again, 23 and change in fact, and then a downtrend since then. That'll be interesting to talk about. I see the stochastics potentially crossing 50 simple and 200 narrow in that distance might be on the cards. 236 of this breakdown, that's still back up above the 200 period. Right, interesting, right? Strong downtrend. Let's see how far the retracements go and if there's any moves in the other direction. So hopefully see you later. Thanks so much to all those people. Thanks to everybody who hit the like button. It was a brilliant show, right? I've had such a great day. Thanks so much. What's the situation looking like? You tell me.
The situation has not improved.
It's not improved, but it felt pretty good to me, Sean. Anyway, we'll be back tomorrow. As you know, it's Friday, so we've got sploshings. Everybody's welcome. Bring your friends. Great. Thanks for being here. What else did I have to say? Well, there's me looking like I just climbed out of bed or something, but I've been doing this for these freaking ages. Anywho, yes. Well, you know, bing bong, price is wrong. You know, links in the description. Thanks to everybody who watches these shows and hits like and that. You really appreciate it. Thanks so much. Thanks. See you tomorrow, guys.